All right, let's get started. Look, I have asked all of you your background. My background you will see in this note. You have the handout. The last page of that handout. Yeah, thanks. You'll see my background. Hiral, do you have link to this? She's been sent the link. This is where you can see my name is Shashank Shrangi, and I'm the one who's going to be teaching you all the topics not to help you prepare for this exam. And my background is that I've done my engineering from this college here, COEP. Those of you know Shivaji Nagar, not very far from here. Then I went to US, did my masters, and then did my MBA, got my CFA charter. I got my break in investments, money management in this company called as BlackRock. I don't know if they are the largest money manager in the world. They're like huge sums of money. They can buy India twice, thrice, that much money. Like we're talking almost $5 trillion or something, some crazy number like that. Good break, good experience, taught me a lot of things in life. And so CA as a degree definitely worked for me personally. That much I can tell you. It has got that reputation, it has got that brand, it's got, and also it's a challenge. I mean, it's not going to be a cakewalk by any means. So I worked, lived in US for many years, and then come back. And this is, I'm a semi-retired person. I mean, so there's not much that's going on in my life at this point, except for this. So I just come here on weekends. Anand runs the show here. I mean, all the administrative stuff, everything is taken care of by Anand. I'm just a teacher. Okay. So for me, CFA by itself, in my opinion, can actually get you a good break in the industry, can help you establish a foothold in the core finance jobs, and so that you can move forward. Okay, it has got that that weight. The only problem is, and I want to warn you about this right from the very beginning, we are not your regular coaching class. This is not where you come, I give you notes, and then I help you memorize the formula. You memorize it, and then you're done, you pass the exam, great. I always say this, I'll say it again. You can pass the exam, but have you managed to get an interview, and did you pass the interview? That's more important. And this is where majority of the students, so first of all, passing the exam itself is a challenge, no doubt about it, right? But once you pass the exam, what happened? Did you understand how to read an annual report? Can you read a newspaper? Are you interested in finance? Can you talk to the interviewer with confidence, eye to eye? Has all that happened? If it has not happened, then why waste your time, energy, money on all this? So, and that's like a big roadblock, I think, that we have with Indian students, that nobody thinks beyond passing the exam. And what happens is, I'll tell you one thing. Once you're done sitting for the exam, 50-60% of it is going to be lost the very next day after sitting for the exam, unless you have learned how to make use of that information, how to apply that information or knowledge that you have gained. If not, so just be very careful. I'm very big on application. I'm very big on developing an interest in you guys so that you can explore it yourself, so that you become actually interested in this stuff, so that you can at least think of applying. And I also understand finance is not it's not like steel industry or car industry, where you unless you actually go to the industry, you will not know how a car is made, how steel is made, or things like that. This is what you can do pretty much sitting at home, reading an annual report or going to a company's website. That's pretty much what you will do in the company also when you get these kind of jobs. So what's stopping you from actually getting started now itself? We don't know. Sir, we don't know where to start. We don't know how. Get over that hump. Okay. So this is not your regular coaching class. I mean, they're called as coaching class. I don't like that word actually. But anyway, now that doesn't mean that I don't want you guys to pass the exam. But what I'm trying to tell you is, and what I'm big on is, if you just pass the exam, there are many students of mine who have passed the exam. Many batches have happened. And no big deal. You're going to call me and say, sir, I passed the exam. Yeah, right, great. What happened with that knowledge? Did you get a job? Once you get a job, did you actually get a promotion? Once you got a promotion or something, did you actually research and did you find a stock and did you put 10 lakhs in that stock and that has become 50 lakhs? If not, then just don't waste your time. My sincere advice. Because what will happen is you will pass this exam, then nothing will happen. Nobody will give you a job. Then you will shift to another degree and then another degree, then another degree. Before you know it, you're 35 and you're stuck. And many people you'll see like that. And then the passion also goes away. And that fear of these technical terms, that also never goes away. That's just lingering there in the background. You never feel confident enough because you never got your hands dirty. And if at all I learned anything in life in US, it was this. Those guys, what, why, how, they're always in that mode, going into the details of things and actually being very honest. And you have to know where your limitations are. If you don't even read newspaper, you are in trouble. Or if you have tried to read newspaper, but you can't understand it, then you are in trouble. And whether you do level 1, level 2, level 3, if you're still not able to read newspaper, understand it, and if it is not generating any interest, then it doesn't surprise me when I see students who are not getting jobs. Let's just put it like that. Okay, and it doesn't surprise me when there are students of mine who have not even passed their CFA level 1, who are still studying for CFA level 1, and they've gotten interviews and they've passed the interviews and they've gotten jobs. If you go to profitshastra.com, if you look at success stories, you will see many like that. And it doesn't surprise me. And then there's another thing, there are some youngsters who are still in college and all that. They think the ones who are seniors, they have knowledge. The ones who are seniors, they are thinking, oh my God, I wasted so many years and I still don't. There is no such thing. There are engineers who think, oh my God, how will I understand accounting? Then there are commerce students who are thinking, oh my God, how will I understand quant? Everybody has their strengths and weaknesses. So in fact, the best students are either they are very senior, they're very, very senior. So they've gone beyond in terms of, oh, I need to do this to make my career. So they're just coming here and they're like, how can I use it to improve my stock portfolio, to select the stock? You see, like their focus is just to come here to understand that nitty-gritty of actually applying it. Then there are students who are in their first year college, second year college. So they are very fresh. So they have no idea. They just come, and this way I don't have to, whitewash, make them unlearn things and then paint. It's already whitewashed. So they just absorb. So those are actually the best students. The ones that have some experience, some knowledge, some this are actually the ones that I have to, there are knots that I have to first untie. And then, so anyway, long story short, CFA curriculum is awesome. Okay. If you're interested in finance, economics, markets, business, you can't go wrong with this. Okay. The only way you will go wrong is because you are in a hurry to pass this exam and you want to crack this in 5 months. You've cracked it in 5 months and then you're coming back to me, sir, level 2. Okay, come for level 2. Then you pass level 2, then level 3. Okay, come for level 3. You pass level 3. And so what do I do? He said, shouldn't you have asked this when you were preparing for level 1? So there are, and so that's a big, huge thing with us in Indian students, that we want to finish this degree in the shortest possible time. So my suggestion, if I were you, I would not rush.
So could I ask?
Yeah, please.
Sir, after first test, after cracking first test, sir, job opportunities will be.
Look, that's what I'm saying. So that it's not that whether you will have job opportunities after first level 1 or something like that. It's not a question of that. That's what I'm trying to tell you, that there are students who have gotten jobs before passing level 1 also, and there are students who are finding it difficult to find jobs even after level 2. It's not a question of passing the exam, it's a question of knowledge and whether you have learned to apply that knowledge or not. So for me, passing the exam, yes, great, big deal, awesome, wonderful, congratulations, hugs, beer, this, that, we do all that, fine. Now what?
Interview.
What I'm saying is the interview. So what I have done in order to fix that issue that students have, which is what you are asking, I understand your question, and it's a good question. I have created a to-do list of things that you need to do in order to put things in your resume. Otherwise, you won't even get interview calls. So let me, in fact, show you what I'm planning, what I meant by this. There are things that I want you to do. That's one second. So all of you, when you register with Profit Shastra, you will get access to this G Drive, Google Drive. Okay. In this Google Drive, there is a folder called as L1 extra material. This is what you will get access to. There is a folder called career research. Okay. In this folder, there is a folder called DMART research. And then there is something called as to-do list for equity research job application. So this is apart from your regular studies. I want you to do this. There are 6 things that you need to do. This itself involves reading an investing book. This involves reading an annual report. This involves doing analysis. This involves a lot of things, which most students, they think once you pass level 1, there is a job that is going to just fall on your lap. Nothing like that happens. So once you do this and you have shown me your work, I want you to put this in your resume. This is what gets students, job interviews. And once you get the job interview, now the interviewer, you can keep the focus of the interview on this project itself, which you know very well, which you have done. Now you see the whole game changes. You don't go there and say, "Give me job. I've done level 1." Okay. They don't care for those things. The industry is looking at you as like, okay, what can you do? No, I'm very good at learning. I'll pick it up. You give me any job. No, it doesn't work like that. It's 21st century. Let's be smart. There is a reason there are not 500 students in this class. Okay, there is a reason Profit Shastra students get a job, and it's this. So your work is cut out for you. And believe me, if I tell this to 10 students, only 2 students actually do this. And that's how bad the level of student. Then what do you expect me to help you out with? Nothing. You do your job. I've told you what to do. It's been listed out. Most students are just not even able to keep up with this class. I'll tell you something about this class also, just so that you understand how it goes. Okay. One thing, there is going to be this is, all of you have got the schedule. Schedule meaning the timetable. The timetable, I must have shared it, when what class is happening. That is timetable. That schedule has already been done. The class will follow that exactly, unless I die or I am in a hospital or something else happens in my family. listen. Anyway, so that's my thing. Okay. So that's as far as job scene is concerned. Okay. You have to do your work. There is no shortcuts for that, at least not in this class. Okay. Then in terms of how the class proceeds, there's a timetable, there's a schedule, there is, in terms of how we will proceed in terms of completing the topics, in terms of midterm exam or something like that, and mock exams. That's all mentioned. Anand must have given it to you already. Okay. The lectures happen from 2:30 to 6:30. And before the lectures, 1:30 to 2:30 is the practice test. So let's say we'll not start practice test for another week or so, but we'll let you know once the practice test. Once we get to the core curriculum, the practice test will start. Okay. And then after the weekend lectures are done, during the weekday from Monday to Friday, you will get access to these video recordings of problem solving that I personally solved problems. There are about 1,500 problems that have been solved and recorded. So whatever topic that we have covered, please look for the problems, recordings of those problem solving on that topic during the weekday. Watch the problem solving. So I've already solved the problems for you. Watch it first, right? Then your task is not over from Monday to Friday. After that, you are supposed to solve. There is a folder here called as question bank. Then on the same topic, now please solve this question bank. So that's like the third level of preparation for each topic. Are you following what I'm trying to say? Then when you come here on Saturday, Sunday, the fourth level is you actually take the practice test on the lecture that was delivered last Saturday, on which you saw the problem solving recording, that where I have solved the problem, on which you have on your own solved this problem solving set, which actually, let me share the screen. Like this problem solving, this you're supposed to do on your own. And this problem, there's a folder called as problem solving. This is where I have already solved these problems, and the videos are available for these problems that have been solved. Okay. So this you can access. And then when you come on Saturday, Sunday, there will be a test. So now you cannot say, so your work is cut out. So first of all, weekend lectures, then watching the problem solving sessions, recording, then doing problem solving from another question bank, and then practice test, which is another separate question bank. Okay, so that's the level. Yes. So are there practice tests every weekend? Yes. The answer to it is yes. There are practice tests that are going to be every weekend.
It's mentioned in the schedule.
In the schedule also it is mentioned. Yeah. So anyway, I just want to let you guys know. So yeah, it's quite a detailed preparation. Okay. So anyway, that's that. So see whether it works for you or not. All the lectures here are recorded. So if you miss a certain lecture for whatever reason, the recording is there. This is 21st century, you know. In fact, if you don't feel like coming to the class, be my guest. Just log in from home. I can understand those of you who are working, it gets tiring, you know, it gets really tiring. One caution about the practice test. Don't expect to do very well in these practice tests. Okay. And what happens is, look, this is not your university exams or something. First of all, don't look at me as a teacher also. Look at me more as a mentor, as an uncle or something like that. You know, that's probably a better way to look at me, so that you have a relationship with me, so that you can actually talk. And so don't look at this class also as from the perspective that, this is a degree class or something like that. Let's be open, let's be honest, let's be practical here. Okay. I'm just trying to help you get into the industry. That's more of my role than actually helping you pass the exam. Passing the exam is just secondary for me. It's not a big deal. In fact, if you do these problems on your own, you don't even need to come to this class. You will pass the exam. But don't come to me after you pass the exam, sir, I'm not getting a job. I've already told you why you're not getting a job and why people don't get a job. They just don't know how to apply. And it is not because you're not good with English speaking skills or something like, no, it's not. You're just not good technically. Let's just put it like that. Industry wants you to be up there. These are true white collar jobs. These jobs actually, they may not pay you very well initially, but 5 years, 10 years down the line, you'll be making a lot of money. So there is definitely a competition for this job. All the smartest people in, definitely want these jobs. Who doesn't want these jobs? You'll be sitting in an AC room and, reading annual reports, talking to the clients, investing on behalf of the clients. You're putting in $1 million on the line to $20 million on. Let's just put it like that. It's these things are sought after. Everybody wants these jobs. Okay. So therefore, your work is cut out. And I am telling you, and that is my theory, that CFA by itself is good enough to get you a break. You don't need anything else. Just level 1 if you do it right. So take 10 months if you need to, but get it done right. So that when you go for the interview and they ask you questions, you should be confident. You've done your job, you've got it right, you have done this project that Profit Shastra wants you to do. Get it done right, even if it takes time. Don't be in a rush. Let other people pass the exam. Let them go. What has happened? So many people have passed the exam. So let's just be careful about that. So anyway, now that we've done with what else? Is there anything else that I wanted you to be aware of? There's a few things that I just want you to understand with my experience with students is that we are good with studying, but students don't have reading habit here. So if I give you a book to, people can study, pass the exam, but how good are they with application? That is the sore point, and that is where people don't get jobs. So that's another thing. So what I've done is in this Google Drive folder, there is a a folder called as investing books. Please access this. There are a lot of books that we have put in on investing, things like that. Okay. Then there is book. There is investing resources. There are all the websites that you can go to and access and build interest in the topic. Just don't be focused on studying. The best people in the industry, they are not book smart. They are not degree holders. They're not toppers. They are street smart. Now, what you want is you want to be a combination of book smart and a street smart. Okay, so just keep that in mind. Because those things, maybe some of these things I'll repeat, but it is up to you to not to take these things seriously. What else I want to tell you about this? So yeah, develop reading habit. If you don't have it, you guys are young. I think you can change it. But if you're only interested in reading technical books, technical in the sense these CFA books or things, notes, Profit Shastra notes and things like that, know that our chances are limited in the industry. Because the industry wants you to go beyond. And again, I've told you, I'm telling you this again, none of this you can't do yourself. You can do it. Once you've attended the lecture, CFA is going into details. It is building basics. I am helping you build basics, but I can't help you build the entire thing. You have to build it on your own. I can give you the foundation. Okay. And I can give you the guideline. I can tell you this is what you're supposed to do. Now, if you just sit here and say, Shashank sir is so good. Shashank sir is nice, very nice lecture. What does it do? Nothing. Go walk on that path. Build your profile, be a man, be a woman, whatever. So just be careful like that, because I don't want to waste others' time. I don't want you to waste my time, seriously. In fact, you'll be better off going for other coaching classes where they'll give you notes and how to memorize formula and things like that. You want to get it done in the shortest possible. With me, there will be a journey. Until I see that you have made it to the industry, I'll not give up on you, But also another thing you have to keep in mind is you will have to make the effort to build relationship with me. I'll not come to you. I'll just tell you. There are many students who come here, but only very few, for some reason, get attached to me. Make use of my, education, my experience. I think I can help you. That's all I can tell you. And I can give you pointers, but you have to walk. Okay. So develop reading habit if you can, because this industry is not for you if you don't have reading habit. And reading, by the way, I don't mean like reading financial journals and all that, but do you even read novels? Because comprehension is a big part of this entire thing. So just like that, okay. Read investing books, go to these websites that we have mentioned here. There are these documentaries, videos that you can go on YouTube. We have mentioned those also. There are movies on finance and Wall Street and things like that you can actually watch to develop interest, to build interest. So you don't need someone to be sitting with you and telling you each and everything. You can do a lot of things to keep your interest alive. Okay. So therefore, passing the exam is a byproduct. That's just given. You're not making me happy by passing the exam. Can you go beyond it? And it has nothing to do with your age, just because you're in college or just because you are now very old. None of that applies. No. There have been all kinds of students here. There have been students, some of the best students of mine, there was a major in the army. What background that person had? Nothing. There was one girl who was a homeopathy doctor. So there are all kinds of students who do it. So you cannot say that in this batch itself, there's one a very senior level, almost retiring from manufacturing industry. One person who has joined this batch. You'll see him tomorrow. So all kinds of people come. So it's not, and it's another thing is, by the way, you do want to learn finance, if not for your career, for your own. What will you do once you start earning money? Where will you invest it? Shouldn't you know that? I mean, in fact, the moment people find out that you're from finance background or something, they'll start asking you, your family members, and tomorrow you guys will get married, you will have a family. Should I take a loan? Shouldn't I take a loan? All those things. So just for that, keep it in mind. Okay. So very useful course, in my opinion. Do it right. Get the most out of it, is what I'm saying. It can actually give you a lot. It's power packed. Now it's up to you how much you can extract. And again, passing the exam is no benchmark for me in terms of how much you have extracted, because I have seen enough of students who pass the exam. With practice tests, yeah, I lost chain of thought there. Do not be competitive, or do not feel ashamed of scoring low in practice test. This is not a university exam. This is not going to, these scores are not going to, sent to your house or anything. This is just for you and me to keep track of how you're progressing. So for after every test, you will be submitting the answer sheets. Online students will be submitting it by internet, by email, and all the scores will be recorded. Like how this is the scorecard from the previous batch. Okay. Now you see this, like many students, you see the blanks. These are the tests. The rows are the tests. You see this? These are the tests that have happened every weekend. Okay. The rows, and these are the scores of this student. Now, do you see in a class of maybe, I don't know, 30, 40, there are only this 5 or 10 that have actually taken quite a few tests. Most of them just drop out. Some of them feel ashamed because they're not scoring high and they think their impression, who knows who, man, in this class. 5 months from now, this class will be over. No, seriously, I'm not kidding. There is no need to be feeling ashamed or anything like that. If you, in fact, use this as a benchmark to say that, yeah, man, I mean, the guy who was a topper last batch, okay, this guy, this was his third batch at Profit Shastra. He started, when he took the test, he was scoring 20s. Look at his scores, 80s, 90s, like that, third batch. He didn't feel, the best thing about this guy was He kept at it. So it's pretty awesome. And people like this actually really take the benefit of now. He can give you this lecture. I can tell you this much. By the end of it, he was actually debating with me. He was, coming up with thoughts that I also had not thought of, which is very good. Which is actually, and when somebody becomes like that, even as a teacher, it's actually very, very nice feeling that one gets. That man, that's like you see a transformation. Just a year back, what this person was and what he or she has become. So my sincere hope, but there are not many who become like that. I mean, I don't know. There is something. And these are some of these guys, they just suck the hell out of me, which is fine by me, which is what my job, which is what you're paying us for. Suck me, And by the way, I've studied in US and things like that. So for me, call me sir, call me bhaiya, call me uncle, call me Shashank, call me Abe, whatever. It doesn't matter to me. What matter? And you want to eat in this class, eat. You want to sleep in this class, sleep. What I'm saying is, whenever you are looking at me, you're looking at here or hearing this, please pay full attention. Don't let your attention wander off. Okay. And if you think that if by walking out of this class for 5-10 minutes when the class is going on, it get fresh air and come back, that helps, do that. Let's not bring in formalities any which ways. If I say 10 things, the best student in the class probably understands 8. That person will probably remember 7. That's the best student that I'm talking about. Most students, 80% of the class probably understands only 7 to begin with. And they probably only remember 3 or 4. So do not make, and this is a beginning for you. It's okay. It's a journey. It's going to take time. If all I say is if nothing has happened so far in this life, I mean, what will happen in another 5 months? Let's just be honest to ourselves, okay? So anyway, you might find me depressing. Oh, by the way, there's another thing. I may not be the teacher for you because this message, because I'm not going to change how I talk and whatnot, because I will have to tell you, maybe it's coming across as very hard on the ego or whatever, but I will have to tell you what it is like there outside. It is difficult. It is competitive. Okay. The guys who are getting good jobs, they have been mentored very nicely. Their resumes have been looked over by 10 people, 5 people. Every single mistake that has been taken care. How to even write a line on the resume, that itself has been debated. That's the level of preparation that IIT IIM guys go through. It's everything is coached. It's not there, and to begin, and they also have the raw intelligence. People who come here, they're not from IIT IIM. Look, let's just be honest. So let's be practical. Let's try to game the game. I think I can help you there. All I need is your focus, attention, and to the best of your capability. And accept if you're not understanding, it's okay. It's not the end of the world. It's okay to repeat the batch. It's okay to score 20s in the exam. But let's be honest. And another thing, especially with Indian students in India, this is a pretty expensive exam, man. $1,200 or something like that. And people just register for this exam as if, 1,200 and now the rupee is at 70. Oops, that's a pretty expensive deal, man. So I don't know. I can think of a lot of things to do with 1 lakh or whatever rupees that you're going to be spending on this exam. And then they fail. And I've heard people say, and just for trial we had seen. You could have given me 1 lakh for trial. I could have shown you how to make use of that 1 lakh. I can do a lot of things that 1 lakh, So please be careful, because if this was like your CA or other exams, Indian exams, it's fine. I mean, 4,000, 5,000, 10,000 rupees. But so that's from that point of view. Also, I'll be careful, if not from the point of view of because in my experience and what I have learned in life is it's okay to take time to do a thing, but do it right. and that gives you more benefit. Even though in the initial phase you will think like you're not making progress, after few years you will see that people who ran, it's like the tortoise and the rabbit story. It is true, and you will give your life another 5 years, and you, if you not remember anything from this class, just try to remember this thing. People who take their time and do it slowly but do it right are the ones who actually make progress. And all you need is interest. That's all. Okay. So anyway, I've talked enough. You have not come to listen to all this today. And what I want to do is, I have right now I have two things in my mind that I want to do before I let you go and we finish this. One is, I want you to, because see, look, the exam part, you can talk to Anand. He will give you all the details about exam, and you probably have already researched it and you know it, what topics and this, that. I mean, that's not something, because anyways, throughout the semester, we're going to go into details of all this. What I want to do in this first lecture, oh, by the way, for Profit Shastra, the first lecture, you know, there is this thing in India about demo lecture and this and that. Our batch has started. It will be locked. Tomorrow is the second lecture. It'll be locked, done. Abhi ho gaya. You know, if you've taken admission, great. If you've not taken admission, thank you. You know, so we are not in this demo multiple. This is the only class that we repeat is this, because last, I think there was some function or some palki, and many students were not able to come. Any which ways, we keep the first lecture twice, so it's okay. Tomorrow is the second lecture as per the schedule, and we will follow it. Okay. Yeah, so the two things that I want to do right now is give you an overview of the industry, so that you at least know where the jobs are, who your future employers are. Okay, so that at least I try to pull you out of this this narrow focus on passing the exam. Let's widen our focus, and so that we know what the industry is like, where is it, what is it that you will be doing in the industry. Okay, think of that also. Okay, then once we're done with that, then I will give you so the very first topic that we start here is financial reporting and analysis, which is sort of accounting. Okay, so we will go into the details of financial statements. Okay, so that's the thing, and then that thing will continue. And then once this example which I use to teach financial statements over, FRA topics will start. Okay, maybe tomorrow, if or as per the schedule, it's going to be next Sunday. Okay. All right. So now, 28. Fine. Look, what I want to do is, I want you to get an idea of the industry, investment banking. So this slide you don't have, there's just one slide. Now, what CFA is trying to prepare you for as a career is in the investment banking industry, in the investment industry. So there is commercial banking and there is investment banking. First, you need to understand that. So commercial banking is what you know or what you have dealt with. If you walk into a bank, if you use their ATM, if you've seen somebody take a house loan, auto loan, that's commercial banking. Okay. Investment banking is in India. Well, I mean, in today's India, it's not that foreign anymore as a concept. But investment banking deals with what we call as capital markets. So there is money not just available in the banks, there's money in the capital markets also. What do we mean by that? Like stock market, there is bond market. So you as a company can either go take a loan from the bank, or you can actually go and issue a bond in the capital markets, or you can issue a stock and get money in the capital markets, equity market, things like that. As a CFA person, you will be working in this field, investment banking side. Okay, so we will not touch commercial banking. That's not our goal. Okay. So Now, in the investment banking side, there is something called as buy side or investment management side, or called as money management side. That's actually the core focus of CFA. Okay, this buy side. Buy side is, if you have heard of mutual funds, that's buy side. Buy side just doesn't mean that they only buy, but buy side means that they have money from some other people. They have a pool of money. Okay, they make a fund out of it, and that fund, that big pool of money, right, that needs to be invested. So it'll be not content, something like this. So you see, let's say you give dollars, I give dollars, somebody else gives dollars, and then this becomes a big pile. This is a fund. It becomes a fund. Now you will be sitting here. Okay, and your job will be to put this money to work, meaning put this money, buy something from this, maybe a stock 1, stock 2, stock 3. Okay, and suppose, let's say you're sitting on $100. Let's say 4 people have given you 25, 25, 25, 25. Okay, and then you invest 25 in this, 25 in this, 25 in this, another stock 25. And let's say you bought one stock, and each of them were selling for $25. Hopefully this $25 stock will become 50, 50, 50. And so this $100 now will become $200, and you've given 100% return to you. That's basically your job. Now, if you work in a mutual fund, you could be buying stocks, you could be buying bonds. If you're buying stock, you work for a stock portfolio manager. If you buy bonds, you work for a bond manager. That's all. Okay, and CFA gets into the details of what stock to select, what should be the strategy, and there's just a whole lot of things. I mean, as you get into level 3, it gets very detailed. Right now, that's good enough. I mean, that's just all you need to know. Right now, that's mutual fund, which most of us know. Right, and now there's another thing with Profit Shastra, which has to do with, someone once told me that G is for God and G is for Google. Like God has all the answers, and so does Google. Okay, so if you don't use Google, I don't know what you're doing in 21st century. Okay, so, and if no one has told you, like suppose, let's just do ICICI mutual fund. Okay? Go there, mutual fund. So look, ICICI is a big entity. Okay, now ICICI is a commercial bank, and it also has an investment bank division. This part is mutual funds, securities, and other things. This part is your regular ICICI bank. You understand that? We don't want to be working here. We don't want to be giving out loans. We want to be working here. This is where the money is. This is where the action is. This is where dynamic part of things are. Okay. Now go to ICICI. I don't know, ICICI mutual fund. Just look. They make it. Click on this. Learn to do this. I told you BlackRock. Just Google BlackRock. What is BlackRock? Right. To view our funds, click here. Click. Look, I am not a US person. Used to be, I'm not. Equity. So many equity funds. Within that, if you select, let's say, large and mid cap fund, then again there are many, in fact, things like that. They'll keep showing. I'm not going to go into details, but you can do that, right? I mean, this is something you should do. Do this for HDFC mutual fund. They are their competitor. Do this for, I don't know, Sundaram, this, that. There are tons of them that are out there. Google, I've told you BlackRock, right? Google BlackRock. What is it? I mean, this is, go to their website. What do? They do the same thing, except that they are not a bank. They are not. They are just focused on investments, right? Anyway, you can just go to these. These are very pretty decent websites that these guys have actually. Anyway, so that's mutual fund, right? Then you could be working in mutual fund under a portfolio manager to select these stocks, okay, or bonds or whatever, right? You could be working. So each of those funds that I showed you, right, in ICICI is actually, these are, there you go. These, they call them schemes. You know, this is, you could be working here, by the way, to manage this money, to help manage this money, I mean, right? Unless you become a portfolio manager, but you will be working at the basics in the beginning.
So,
Yeah.
how it works? Sir? How it's work?
How does what work?
Fund.
Mutual funds.
Ah.
That's what it works like this. Seriously, you give money, I give money. We all subscribe, no, to funds, and that's it. That money that we give is going into this, and it has become a fund. That's it. Call it a pool, call it fund, call it whatever. And then this money, you will be in charge as a CFA person if you get a job there, or you and your boss and your team, and you will have to select. You will have to invest this in any of these securities. That's all. Then there is hedge funds. Now, hedge funds are your are the more how do I say? You know how the way I think about it, there are these theater kalakars, and then there is the Bollywood. So the Bollywood is, hedge funds is the Bollywood, and theater people are mutual funds. So hedge funds have more glamour, more money, more everything. And there are certain differences between hedge funds and mutual funds. First of all, hedge funds can only take money. They will not take your money and my money. They need minimum $1 million investments. So people like you and me are out already, right? There is something called as shorting a stock. Hedge funds can do it. Mutual funds can't do it. There is something shorting as a concept, a bond, a stock, whatever. There's something called as derivatives. Mutual funds can't use derivatives. Hedge funds can use derivatives. There's something called as leverage. Don't worry if you don't understand any of these terms. These are some of these things that you will be learning throughout the, by the end of this class, you will know these things. Leverage meaning taking loan. You know, if you give $100 to mutual fund, they can only invest 100. You know what hedge fund does? It will borrow another $100 on this, and they'll play with $200. That's leverage. They can actually borrow $200 on this 100. That's a 3-to-1 leverage. 3-to-1 leverage. So anyway, so then again, there are some famous names. I don't know if you've heard of them. There's somebody called as George Soros. I don't know if you've heard that name. So again, Google this guy, who this is. You know, read about him, and this is how you develop interest. Okay. So what he has done. How this guy's a billionaire. I mean, I don't know what's his net worth now. 800 crores. This is net worth. So, okay. So that's hedge funds.
Man who bought Bank of England.
That's it. Man who brought down the Bank of England. Google that. Did you read that story? He made $1 billion in 1 year. Okay. Very good. Good. He shorted the pound. And yeah, so these guys are legends. Like they are like Kapil Devs or Sunil Gavaskars of investing world. You know, they're old now, but they're good. Bridgewater. So the biggest hedge fund. Good. You've done your homework. Very good. And I like it. Bridgewater Associates. So these guys are actually the biggest hedge funds. They've got 16,000 crores under them. Bridgewater. They're sort of Westport, Connecticut. I didn't work. I worked not very far from these guys. Very tough place to work, these guys. And very tough interview rounds also. They just kill you. Anyway, good. So bridge, good, very nice. Then there are something called as, again, people are giving them money, but it's not, they only take money from either HNIs or from large institutions. They are institutions. Again, even mutual funds take money from institutions. Okay. One more thing that you will have to keep in mind with CFA, you know, we are not dealing with retail investors. We're dealing with institutional money. We are not dealing with 1 lakh, 1 crore, 10 crore. We're dealing with 1,000 crores, 2,000 crores, 10,000 crores. So I would like you to think a little bit bigger. It's another thing I've seen with students. Somehow they're just stuck with managing retail investors' money. No, there's a big retail. If you can't get into institutional investment, then you get into retail. But other than the big money is in the institutional side. Okay, so just keep that in mind. Okay, then there is private equity funds. So what do they do? So what they do is they, instead of putting money in stocks or bonds, they put money in private companies. Okay, so they buy the private company. Private companies are those that are not listed in the market, that are private. So if instead of now mutual fund, this becomes PE fund. Again, they will not be accepting your money, my money. Again, minimum $1 million. So now, and then instead of buying bonds or stocks, they are buying private company one, private company two. They're putting money in that. So the big names in this industry, private equity, there's a company called as Blackstone. Assets under management, 43,000 crores USD. Sorry? Sequoia is more of a venture capital firm. Blackstone, there is another called as Carlyle. They are the bigger name. There's Apollo Group. Google them. One more thing that you will probably, there are two things in this class, okay? I appreciate the way you are talking and you are, you know, give your inputs. I like it. The way, one thing that I have seen is now students do everything that I tell them to do. There are sincere students who do it really nice. They are sincere in the class. They understand. They have also done what I've asked them to do in terms of, you know, I showed you that project. One place where they miss out, and which is something that you will have to overcome, is communication. They think that if I am sincere and follow sir's advice and do everything he has told me to do, I will get it done, and that's all that needs to be done. But please understand, when it comes to interview or your job, it's you who has to talk to that person. So when you're sitting in this class, you can probably use this as a platform to develop your communication skills. I don't care whether you speak in Hindi, English, Marathi, whatever, Telugu, Tamil. For most part, I can understand what students are saying because I can see what the thought is. So just use that, because see, when you think you know it, but when you try to say it, those are two different things. It just doesn't come out right when you do it for the first time. Even though you might be understanding everything. Okay, so do that. You know, ask me questions, stop me, whatever. I you know, just it's your right actually to do that, and that's how I was taught, and I'm glad I had the opportunity to learn with such people, because then it opens you up. Then it's not like no, just you know, that's your right as a student actually. So if I don't know the answer, I'll get back to you. So I'm not taking pressure because I don't know the answer. It's okay. Not and there's always Google that we can refer to. So let's just keep it open and honest. So okay. All right. So that's your private equity fund. Then there is venture capital fund. So Sequoia would be a venture capital fund. So Sequoia were the ones who had invested in Yahoo and who had invested in Google. These are the guys who who invest in startups. So when private equity fund might be putting $500 million in a company, these guys might be putting in $10 million. You see the difference? Startups don't require much money. They're just 2-3 people sitting in one room like this, and then that's it. They're doing whatever they're doing. So Sequoia, and these are also, by the way, your employers. So you'll see the companies that they have invested in. So they are all of them have offices in India. Okay. So when they say the portfolio, that means the companies that they have invested in. Bank Bazaar, Cafe Coffee Day has investment from Sequoia, Byju's, all that. So a lot of them you have not even heard of. Why? Because they're startups. They're still coming up on the scene. They might be regionally focused, or they might be just very specialized and things like that. And eClerx itself, eClerx has investment from Sequoia. So anyway, so you understand, right, what's going on here. So that's that. And then there is something called as fund of funds, right? By the way, in finance, I always say this. The terms are actually not that difficult to understand. You just have to read it, pause, and think about it for 2 seconds, 3 seconds before you move on. Mutual funds. Mutually, we have put in money. Pooling, mutual, right? So combined, exactly, right? So fund of funds. Fund of funds, essentially what it is doing is, it's the fund of fund as a company is not investing in stocks. It is actually investing in funds. So the fund of fund, they have got a lot of money. They put money into these funds, and these funds in turn put money into different stocks or bonds. Do you understand? Right? So now you'll say, what's the use of this? So now, if you and I cannot invest in this PE fund or hedge fund, we can give money to fund of funds. You have, let's say, $1,000. They will accept your $1,000. And then they will pool those $1,000, make it into $100 million and put into 10 different hedge funds or PE funds. Do you understand their utility? Right? So that's the advantage of fund of funds. Then there's something called as pension funds, right? By the way, I started my career in mutual funds and ended in a fund of funds. Okay, so when you sit in fund of funds, you get to see all these guys, because you're putting money into venture capital fund, into private equity, into hedge funds, into mutual funds. That's basically how. So fund of fund has got this, like this, just sitting on top. You need to be able to parcel money to different funds, things like that. What is pension fund? Pension fund is nothing but where you have to, where you will be, first of all, you understand the word pension. Yeah, when you retire, there are a lot of people who, so when they are working, let's say you started working at 20, you work up to 60. For 40 years, you will be contributing towards your pension. If you don't know, this is how it works. Okay, and then once you retire, you will get money. So this is negative. Now you get positive. So, okay. So if you know your grandfathers or whoever, they probably are going to the bank every month and withdrawing pension. That's what it is, because they've worked, they have now retired, and the company is paying them. Okay. Now the thing is, what it has got to do with CFA, essentially, when this money comes out of their, let's say there's a company, right? And this company has 20,000 employees, and each of these employees every month they are contributing this much. So this adds up, isn't it? This becomes a big dollar. And remember, the company has promised them benefits. Somebody needs to be here to invest this money so that this money is available. So if you happen to be working in a pension fund, this is what you will be doing. You will be managing retirement money. Okay. So that's a pension fund. Insurance funds, essentially you have, there are these insurance companies, you name it, LIC, ICICI Prudential, many are there, right? AXA, MetLife. What do? They take our premiums and then they insure us. right? That's basically what does that insuring mean? So that when we get into problems, let's say they might be covering you for life or insuring you for life related things. So life insurance, so then when a person dies, they get payment, the family gets payment, or whatever, they satisfy certain things. Or it could be non-life, which is called as property and casualty. That is, they could be insuring your house, they could be insuring your car, they could be insuring your scooter, they could be insuring medical insurance, all those things. So if you get sick, if your car gets damaged, if your scooter gets damaged, you file for a claim. Now, what happens is, if you think about it, I don't know if you ever thought of insurance company like that. Many people give them premiums. So they are sitting on a big chunk of premiums, but only very few people ask for claims. So this much money is still there, isn't it? Do you understand what I just said? This money is sitting there. This needs to be invested. If you happen to be working in an insurance fund, this is your job, to invest this money in stocks or bonds or whatever. All right. So that becomes an insurance. In fact, some of the largest funds that are out there are insurance funds. The insurance companies are very rich companies. For most part, they're very rich. Okay. So you could be working there. So in fact, fund of funds, mutual funds, and insurance fund, these are the three places I have actually worked in my career. So I started in mutual fund, went to an insurance fund, and then ended up at fund of funds. So that's how I know this. But they're sitting on lots and lots of money. They're very rich actually, because you can see that, right? Whatever money that they have received from all of us, not all of it is going out as claims. And it builds up that premium that is saved, which is not paid out as claims. It's your money, no, at the end of the day. So yeah.
So do the actuaries invest the money or
Actuaries help write policies. What should be this dollar number is the job of actuary. The job of a CFA is to manage, once this dollar has come in, to invest. Actuary's job is to price the policy. Okay. Then you have something called as sovereign wealth funds. Okay. What do we mean by sovereign wealth funds? So, like, have you heard of this company called AXA, AXA? AXA Insurance Asset Management. You see this. So AXA has an insurance, that's the main thing. And then you will have this asset management, which is money management business, right? And they're big. They're big people. AXA, you name it, any insurance company you type. In fact, in Pune, you have Bajaj Insurance. What is that? Bajaj Finance or something. So they have. But I know somebody who works in their investment management division in Yerwada only. It's there. So these are your employers, by the way. You see. So anyway, just Google it, read about these people. So then you have what is we call them as sovereign wealth funds. Sovereign is nation, sovereign rights and things like that. And these are country funds. What do we mean by that? So there are some countries in the world which are very rich. In fact, they export more than they import. Okay, so think of Saudi Arabia, think of UAE. Have you heard of these countries?
Yes.
Qatar, petrol. They, and they are tiny nations. Bahrain, so what they do, they're just sitting on oil and gas, and the entire world needs that. Right. So we import from them and we give it to them. And they're very tiny nations. How much money they actually need? They don't need much money. So they are sitting on large chunk of money that needs to be invested. Okay. So that pool of money, it's not called mutual fund. It's not called hedge fund. It's called sovereign wealth fund. Okay. So there is your, the UAE has ADIA. Abu Dhabi Investment Authority. And if you look at this, 82,800 crores USD, that's the AUM they have. A big, I mean, that's what, 800 billion or something? So this could be your employer. Okay. I mean, if you're looking for jobs outside, you go to their career section, go to their investment section. What do they do? Things like that. So ADIA is there. Then China has China Investment Corp. Singapore has Temasek. A lot of companies. Now you will not hear of any sovereign wealth fund from India. Why? Good job, because India has more imports than exports. We don't have that much of savings. Good, very nice. Okay. Then there is something called as endowment funds. What do we mean by that? Endowment, generally we talking university funds. So not in India, but like, have you heard of Yale University, Harvard, Stanford? These are big universities, and they have many successful alumni. Alumni are the pass outs, graduates, and they've done very well. And they've been, so first of all, only the best and the brightest go there. Then they end up doing very well in life. They become CEOs, they find companies and things like that. They're generally smart people. Then once they are old or something, then they are saying, look, I have what I am today is because of my university. So they gift their university. So they'll write a $10 million check, $100 million check. Now for a university, what do you really need? A classroom, a projector? I mean, even if it's Harvard, I mean, a lecture is a lecture. You don't need $1 million to give a lecture, right? Students, it's not like they're falling short of students. Students always want to go to Harvard. So that money is piling up. So that becomes Harvard's endowment fund. Okay. So Google that, you will understand. And so you could be working for Harvard Endowment Fund, managing their money, right? IITians have now coming up with that endowment fund. I think it's small, but it's coming up. So I'm sure for your generation, another few years, you will see the job requirement in those endowment funds, because that money needs to be managed, right? Or needs to be invested. Same thing with foundations. Foundations are something like, like, have you heard of Bill Gates Melinda Foundation? Right? So Bill Gates has donated money, right? However much, $40-50 billion he has donated. Now that money, just because they want to eradicate malaria, or they want to get child poverty or something like that, women education, it's not like they're going to write a $40 billion check today itself. It's over a period of time that they do it, right? So meanwhile, that $40-50 billion needs to be managed, it needs to be invested, and they're smart people, they want to grow it, right? So you might be working for Bill and Melinda Gates Foundation. Ajit Premji, from Wipro, he also has a foundation, Ajit Premji Foundation. Narayan Murthy from Infosys has a foundation, and these guys are sitting on money. In fact, there are people working on that money and investing it. So they're going to spend some money. Yes, they're going to write a check, give donation to here, this, that, or they might have their own projects going on, but it's not going to be all the time, right? Or it's not going to be one shot and they're done. They've returned the entire $50 billion in one shot. No, it doesn't work like that. They are supposed to be in existence for long term. Okay, so you could be working for that. So that's your, in a nutshell, money management, investment management, buy side is what I mean, and the CFA focuses on this industry. Okay, and I know it works because it worked for me. Yes, they respect it, this degree, and it's designed for this, and it's very interesting. You'll be working with very smart people, that much I can tell you. And there's always something or the other that's going on in the market that will keep you busy, occupied. Again, it has to be your thing. I mean, if it's not your thing, then you'll probably find it boring. So just see whether whatever I've told you, does it even make sense to you? You may not have understood everything that I said, but does it spark enough interest for you to get into this? That's it. I mean, there's no other goal beyond that. If it's like not coming across as interesting, don't. I always say this, don't waste your time on things that you're probably not going to be doing 5 years from now anyways. If you're not finding it interesting now, and this actually the entire CFA, I think this is the most interesting part. Apart from that, the lectures and all are just very serious in affair, it's so anyway. Okay, then there is the sell side. By the way, the 4 hours lectures are not entirely 4 hours. I know. I'll give you a break. So just is the clock not? It's not right, no. I need to change that. So we'll just finish this slide and I'll give you a break, okay? Before we get into that core accounting thing, so that if you're feeling sleepy, you can go walk or get your chai or something, come back. Then there is the sell side, right? The sell side is the side that sells, and it sells meaning it sells advisory, it sells knowledge, it sells expertise. And who does it sell to? It usually sells it to the buy side. And what do they sell? They sell, like, look, remember, if you're working for HDFC, some mutual fund, or ICICI mutual fund, or some BlackRock or something like that, you need ideas. You need and one more thing, one of the reasons it's difficult to break into this industry is that there are not that many people working. So there could be a fund of, let's say, 2,000 crore, 5,000 crore AUM. AUM is assets under management. It is that fund size. It is that dollar, that big dollar that I was drawing. No, it's that's called as AUM, right? You would think they probably need 1,000 people to do 5,000. No, it's not like that. 5,000 also, they'll probably need only 10 people. And for 10,000 crore also, they'll need only maybe 11 people. Do you see? Because when you're putting the trade, just because the fund size is growing doesn't mean that the work has gone up. And now do you see why it is a very profitable business? Very few people are needed. But if you're manufacturing, let's say if you need to now, instead of 2,000 parts, you need to manufacture 5,000 parts. You need more machines, you need more people, you need everything, you need more shifts. That is why the service industries are very profitable, and people, so that's the thing. So anyway, so now with 10 and 11 people, right? And let's say they are managing this big fund. They need ideas. These 10 or 11 people that are there working with the portfolio manager, they can only do so much. They can only research so many companies to invest into. So what they do is they outsource. You understand the word outsource? They give it out, right? The research to sell side. Okay. And the sell side specializes in helping them. They'll pick up the phone and they say, hey, mutual fund people, you say, hey, how are you? Yeah, we have this great idea. There is this stock that we have done research on that we think is undervalued, that we think has a potential to become twice the price that it is selling at. And these are the reasons. We've written a research report. We are sending it to you. Pay us the money. Do you see now the difference between buy side? So buy side then buys it. They like the idea. They trade. That is, they invest money in that. And then, hopefully the stock will go up. So that's your sell side. So that's this research and analysis is that. Okay. Then the buy side needs an investment account to trade. Like what, if you know BMAT accounts, for trading and all that, brokerage accounts is what's called in US and other places. So they will help them open those accounts, place their trades, things like that. So that's trading and brokerage. So to help them do that. So look, on one hand, this guy is selling them the research report, and then once they've sold the research report, and now these guys want to actually implement the idea, that is to buy or sell that company that they have proposed, they have to put the trade. The trading account also is with them only. And then they are going, whatever the trade they put, let's say they put in $100 worth of trade, these guys will get 1% of it or 0.5% of it. So they make $0.5 on that also. So that's trading and brokerage. Do you see the point? Okay. Then there is something called issuance, placement, financing. So this issuance is issuance of stock. It's the IPO, if you have ever heard of, initial public offering. a company needs money, they need, again, we'll talk about all these things in detail. Right now, just get an overview. If you don't understand the details, that's also okay. They will help them raise money, or they help them get funding, so that's that's another thing. So mergers, acquisition is another thing that they do. It's like, these are basically brokers, essentially. You already know sub-brokers, and if you ever had a demat account, then you know what a sub-broker is. They just help you invest your money or trade your money and all that, and they're getting brokerage out of that, right? The sell-side investment bankers, they're not called sub-brokers, but they are basically glorified brokers. Instead of working with 10 lakh, they're working with $100 million. Do you see what I'm saying? There's difference. They're just a bigger version of what you see day to day, and like, this advisory, that advisory on the road. More money here, more glamorous here, but they're just glorified brokers. So they are sitting in between and selling their expertise, in terms of research, in terms of helping them get money through issuance or whatnot, helping propose marriage between two companies. So they will look at the details or fundamentals of company A, they will look at fundamentals of company B, then they'll say, why don't you buy each other? And once they are buying each other, if the deal goes through, they take a percentage of that deal. So suppose it's 1,000 crore deal and you take 1% of it, that's a good money. Now, do you see why people want to get these jobs? So it's a lot of money there in these jobs. Now there are certain people who work very well on sell side. There are certain people who work very well on. I just want to give you an idea on that also. If you think you are a marketing person, that is, you can talk to the clients, you don't mind cold calling. Do you understand what cold calling is? So cold calling is, suppose I give you a product to sell, something like this. Then I'll give you this, and I'll give you the phone directory. And then you pick up, and the phone directory, you look at the phone number, you punch. You said, hello, sir, I have this product. Would you like to buy? Phone down. Stop calling me. This, that, and they'll yell at you. Then you call the second person, the third person, the fourth person. That's cold calling. That's marketing. That's sales, hardcore sales. If you think you can do that and you enjoy that, and if you can accept the rejection that comes with it, the people who make most money are the people who are in marketing, by the way. They're not the people who are in investments and research and all that. Marketing people are always given, they keep on knocking at the door. Do you want to buy? Do you want to buy? So that's cold calling. So if you think you have that kind of a personality, these are, and different people have different personality. Some have both, but more of one versus the other. So that's sell side. You would probably work very well on sell side, but know that this is a hardcore selling job actually at the end of the day. If you want to propose marriage between A and B, it's not just you just do, sir, I went to A, I went to B, and I propose. No. Go to A, go to A1, go to A2, go to A3, go to A4, A100, A1000, B1, B2, da 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 da. So it's like 15-hour job. Okay, so if you like that, and you will get paid. That 10 crore that they have made, they will give you a percentage of that 10 crore. Look, but you obviously worked hard for it. You will work hard for maybe 2 years, and one deal will go through. But 2 years, you have to keep on accepting that rejection, something like that. Okay.
What type of decisions are made?
Decisions, yeah, these are decisions. Trading, what company to issue buy call on, what company to issue sell call on. No decision and all, selling. Junior ko kya? Junior ko to what I've told you is what they do. You have to keep on working on the financials of company A, company A1, company A2, merge it with the financials of company B, B1, B2. Your seniors are asking you to do this. Then whatever presentation you have made, the senior will go show it to company A, company B, try to get that mandate, try to propose that marriage. That's all.
Means,
That's buy side. You asked me about sell side. No, I was giving you the sell side right now.
I'm asking you only decisions. What are
Decisions in the sense, you, as a fund of fund, if you work, or mutual fund, if you work, your job is to find the right investment. So I was coming to that actually. So in sell side, that's what you do, right? You are proposing, selling ideas of merger of A and B, idea of merger of C and D.
you are proposing, but take that decision.
Who take that decision? The company management of C and D will take the decision. That is what I'm saying, that if you propose the marriage proposal to 100, maybe one deal will happen. But you will have to work on all 100 to make that proposal. So
You are in front of friends.
you are again confusing. We are talking two different things. I am talking about sell side. You keep bringing in fund of fund. That has nothing to do with sell side.
Buy side and I'm not asking you this way, means buy side and sell
And so did you understand what I just said about, what did you understand about sell side?
Sell side, sales advisory.
Advisory. Good. What did you understand about buy side?
Buy side means where to invest.
Good. That's
Buy
it.
side.
Yeah, day to day.
Asking you this,
Huh.
you are in fund of funds.
Huh.
As an analyst or
Correct.
there is something $1 billion.
Correct.
And you think that this fund of fund invest in some
Correct.
mutual fund.
Good.
Propose that. But who will take that decision?
Who will, so as a team, portfolio manager, the head, the portfolio manager, who is the boss of that fund, will ultimately take the decision to invest in A, B, or C.
The fund of fund company is very large.
In very large company, there are many funds. Each fund has a portfolio manager. That portfolio manager has analysts like me working for him. You become a portfolio manager when you're 40, 50-year-old. You don't become portfolio manager when you're young. So that analyst will propose, sir, should we buy this, this, that. Then the team will sit. And then the portfolio manager has the ultimate say, whether to buy or to sell or whatever, to accept that decision.
After that, CEO means that
CEO is just a CEO. CEO doesn't get into these little detail. CEO is just the top level guy. The portfolio manager, you don't go to the CEO level. CEO doesn't matter. For us, you will be working under a portfolio manager if you work in the buy side. Equity research analyst can be a buy side job, can also be a sell side job. Just keep that in mind. Sell side guys also are doing research and analysis. The buy side also is doing research and analysis. If you join a job as a research analyst in sell side, you will be working under senior research analyst. If you join the job as a research analyst on the buy side, you will be working under.
If I join as a buy side
research analyst, you will be working under portfolio manager. That's what it is. All right. What I'll do is I'll give you a break. That's all I wanted. Oh, by the way, just wanted to give you an idea of so the most famous investment banking firm that's out there is Goldman Sachs. You want to know what sell side people do? Go to Goldman Sachs. Go to their websites. See, this is how happy you will be when you work at, what we do, investment banking, services, industries. So just now, again, I can't give, I can only show you. It's up to you to actually go home and look into these things. But I do want my students to look at things broadly and confidently. The more you look at, the more your brain will expand. Just keep that in mind, okay? The more narrow you focus, the narrower the results will be. In terms of, if I just looking to pass the exam, then you don't need to look at all this. Like, why? These are not needed. It's just a waste of time. I think this is a good waste of time. People in India may not agree with me, but then again, you also have to see how far people have gone and what they have done. So they also have, by the way, buy-side investment management, Goldman Sachs. So, and it's pretty big, even the buy-side. Another thing, before I forget, make good notes when you are in this class. I'll not, or you can go watch the recording, but there are only so many recordings that you will watch. I can tell you that much. It just gets very boring. Because there are going to be 31 or so lectures in 4 hours each. Just don't have that much time. Okay. So while you are here, if you hear anything new, just make good notes, because the moment the class is over, when you're stuck in the traffic or something else, new movie, this, that, and the other, 50% of what you have heard here will vanish. And if you are in a job and things are going on, or if things are going on in your life, just completely random stuff that's going on, again, you will forget. So better get into the habit of writing detailed notes. Okay. Now what I'll do is I'll give you a break. Just take 20 minutes break. We'll start at 3:50 and then to another 20 minutes. So, and then we'll, what we will do is we will start this accounting. Okay. So what I've done is so far is I've just given you a very high level view of what's the industry is. Now we'll descend. We'll come down. Okay. And we'll come down to the level of nitty gritty. Okay. Because to go up there, you first need to have a very solid base. And so throughout, from now until the end of this semester, we all working on the basics. Okay. So we'll work on accounting through the story of an example, so that so your FRA lectures, when they begin, we will be making use of this example. So this example is very, very important. Okay. Because entire FRA, I'll be making use of this example to teach you FRA. So this becomes a good base. All right, take a break. Go get some fresh air, get tea or whatever if you need to. And I'll see you in 20 minutes. Okay. So look, what we're going to do is the fundamentals of anything in finance, is definitely accounting forms a base. If you want to go anywhere in this industry, you need to be able to at least know how to read annual reports, how to make sense of them. Okay. And unless you understand accounting, you'll not be able to do that. Right. So that forms a base. In fact, accounting is where the CA and CFA guys, that's what they have in common. Okay. If you just to make you understand what CA does and what's the difference between CA and CFA, the CA guys, they help record transactions, they help make financial statements of a company, they help the companies pay taxes. That's pretty much basically in a nutshell what CA does. Okay, CFA guy, they start from where CA stops. Okay, they take the financial statement that has been prepared by CA and then they analyze them and make decisions based on that, whether the company is good to put money into or whether it's not good company to put money into and things like that. Okay, so if you pay attention to the full form of CFA, Chartered Financial Analyst. So the CFA guy is an analyst, okay, versus CA, Chartered Accountant. CA is an accountant, right? So accountant helps make the financial statement. CFA analyzes the financial statement. Are we, okay. Now, in terms of, so therefore, it is very important that you understand accounting. Now, when I say you understand accounting, I don't mean that you should know how accounts are done. If you come from commerce background, that's probably what has been taught to you, but that's not of importance here in CFA. In CFA, you need to be able to interpret, analyze, and be able to tell a story of a company. And you need to get a qualitative understanding of the company by looking at the quantitative numbers, by looking at financial statement. Financial statement, nothing but set of numbers. That's all there is. Okay. Now, unless you understand the fundamentals of accounting, you will not be able to do that. So the commerce students who come to this class, they have been heavily focused on debits and credits and the ledger entries and things like that, which is not of much importance here. Nobody cares. Because remember, you are not going to be preparing financial statement. You're going to be analyzing the financial statements. Okay. So I don't teach it like that. Okay. For me, it is more important whether you actually understand the concept. So what happens with the commerce students who come here, they actually are so detailed oriented that, the saying, that don't lose forest for the sight of trees is what is applicable to them. So if you give them a problem, they'll solve it. But if you actually ask them, okay, so now just take a look at this financial statement, tell me what it is telling you, they have no idea. Okay, so that is something that we need to clear, and we need to be very good with the concept, okay, fundamentals. So this is the handout that is given to all of you, this presentation that I'm going to be working with now. Okay, my sincere suggestion, save this handout until you get a job. Okay, if you're applying, write your name on it, just save it. Not because I made it, because I think this will help solve a lot of your doubts about financial statements. What we have tried to do here is we are trying to build financial statement of a company using a story of a business. Okay, because again, that's the way I like to teach, so that you can actually get an understanding of the concept and be able to apply them right away. Not in terms of memorize this, memorize that, and this is what is going to be asked in the exam. Do it the other way around. That's always better. Get the concept, hold on to it strongly, so that passing the exam is just a byproduct. Again, you sit there with confidence. You don't go there with kya puchega exam kind of a thing. Okay. So let's get started with this. We'll not be able to finish all of it. Last lecture, which is a repeat of, and this lecture is a repeat of the last lecture, we were only able to do certain slides, and the remaining slides will be taken tomorrow. So what will you learn through this example? You will understand what different kind of financial statements exist. Okay. And what are the various items that are reported in each financial statement? How do you prepare financial statements? What's the difference between cash accounting, accrual accounting, direct cash flow, indirect cash flow, linking of relationship of income statement to balance sheet, linking of relationship of cash flow statement to income statement. So by the end of these 38 slides of what you see here, okay, when you go back, and if you've understood, you will understand all these things. Probably not, some of these things probably don't even make sense to you right now, why they are even being jotted down. But go back to this and you should be able to. Now, interview questions are heavily focused on these items. So therefore, because you have come here for this lecture, be my guest, take this knowledge. Even if you don't come for next lecture, it's fine, but save this note. I think it will help you when you go for your core finance interviews. Okay, because they will make you, they're more focused on whether you understand these financial statements or not. Okay. So now, first thing that I want you to do is, and by the way, this example has come about based on my own experience with accounting. So the way accounting was taught to me was very dry, the debit and the credit, and this just didn't make sense to me. I started, I guess I can use the word, I started hating accounting. I don't have much love for it. Accountants are great, but I don't think I can do that job. It's pretty, it's just not my cup of tea. Good for accountants, and so what happened was, but because I didn't like accounting, I just approached it like how you probably have approached many of your exams. I just got through it somehow, managed to pass this. But later on, when I got into the industry, I realized, oops, you cannot actually progress in, or you will always find opening an account, annual report, sort of a dull job or not a very exciting job, because you really are afraid of those numbers. Those numbers don't make sense to you. Okay. So somehow, I don't know, maybe I got experienced enough or what, that this example came through. Okay. So I think it's a nice example. I think so. I wish someone had taught me accounting like this. Let's just put it like that. That's my effort to help you understand accounting, so that it doesn't become a boring, dirty job, but it gives you the concept. And if you can latch on to this example and if you understand it, great. I don't think you need to sit for FRA lectures also. That much also I'll tell you. 50% of FRA is taken care of if you just understand these slides. Okay. That's the confidence I have in these slides, in my opinion. Okay, so let's just go through this. So first thing that I want you to do, or I want to approach, or is this accounting. The moment we think of accounting, we start thinking of Reliance Industries or this or that, big companies, big numbers, and it's that thought process, or some owner, somebody, I don't know what business they do, some financial statement, and we lose accounting right there, because we can never actually relate it to ourselves. We always think it's someone else's statements and things like that, but actually what you don't understand is the way your life is similar to how a company's life is also. So like if you as an individual, you need money to raise a family, car, job, so not job, but house, jewelry, whatever, vehicle. There are three options for you. Either you have your big savings, so that this basically is that you come from a very rich family. Okay, my favorite example here is Rahul Gandhi. You don't need to do anything, man. Nothing. Why would you come sit for these boring lectures? If you are Rahul Gandhi, you won't. Believe me. And none of those kind of people come here. Okay, you probably fall in these two categories. That you have money, and so in order to earn the money to get these things, right, you are either getting education, and through that education you're trying to get a job, through that job you're trying to earn money, and so then you get paid, you are starting to earn. That's pretty much what most of us, 99% of the world does this. Okay, not everybody can be Rahul Gandhi, right? Now what happens is, even when you do all that, that money also is not enough sometimes. So probably that money can buy you a scooter, 50,000, 70,000, 80,000, something like that. But if you want to buy a car, 8 lakhs, what do? I only have a saving of 1 lakh. I need to buy a car of 7 lakh, 5 lakhs, whatever. What do? You go to the bank, get a loan. Right, so that's basically what happens. That's where the bank comes into picture in your life. Now then you have worked for 5-10 years. Now you have a saving of 20 lakhs, for example. But now you need to buy a house. House is costing 1 crore. Again, what do? You go to the bank. Correct? So the bank again comes into the picture. So similarly, if you think of a business is very similar to you. There are some companies in the world that are like Rahul Gandhi. They don't need anybody's money. So think of ITC, the cigarette people, Wills. They don't need any. What money do you need to manufacture cigarettes? And there are people who are willing to pay a lot of money for cigarettes, and they buy a lot of loyalty. Let's just put it like that to that product, right? Think of Hindustan Unilever. Hindustan Unilever makes all these Kisan jams and things like that. Without even knowing, you buy Kisan jam if you want to buy jam, right? So and what do you really need to make Kisan jam? Not much money. There's no super hi-fi technology that goes into making a jam or making a cigarette or things like that. And people buy without even thinking. They buy those things. So but there are not that many companies like that in the world. 99% of the companies are like you and me. Like how you have to compete to get the education, to get a job, to get a higher salary. Same thing with most companies in the world. They have a very standard product that they are trying to market, and so are their competitors, 10 other competitors, right? And so this way, whatever they get, they use it to pay their employees and things like that. But sometimes they need to expand, like how you need a bike or you need a house. They also probably need a bigger plant. So you might need 1 crore, they need 10 crores or 100 crores. So you might have 10 lakhs, when you looking for 1 crore, they will have 1 crore and they're looking for 10 crores. You see, it's just the zeros that are different. That's all. There is nothing really much that is different like that. And same, like if you are sincere to your education, to your career, you progress. Similarly, if they are sincere to their clients and their products, they progress. I mean, it's just, there is justice in the world, in my opinion. So same thing. So if they don't have enough money to buy bigger things, they'll go to the bank, similar to how you would go to the bank. That much is clear. Like a company is very similar to your situation. Okay. So the point that I'm trying to make is, if a company has financial statement, believe it or not, you also have a financial statement. Okay. So that's one thing. Now, so you obviously, when you go to the bank, you get assets, right? For an individual, you end up buying car, house. For a company, they end up buying plant, machinery, buildings, things like that, right? Those things are called as assets. And remember, you got, let's say, then remember there were savings that you had, let's say 10 lakh of savings, and you got 90 lakhs of loan to buy that 1 crore of house. That 90 lakh becomes the liability. And that 10 lakh is the equity. Now this 10 crore can become 10 crore, 90 crore, 100 crore of plant. It's just the zeros that are different. But do you understand the concept that there is an asset that gets created, there's a liability that gets created, there's an equity that is there, both you as well as the business? Yes, so far so good. Okay. Now, what you are seeing here is actually a balance sheet. How so? Remember, the assets for a business, assets like business, plant, machinery, building, corporate jet were bought. And they were bought by, let's say they got 5 crores of loan from SBI, 5 crore of loans from Kotak. And then let's say they had their, forget about IPO right now. And they, not 5 crores, we needed what? 100 crores, no? And we had 10 crores of savings. So 45 crores from here. And let's say that 100 crore that they raised went here. Did you understand this? By the way, feel free to stop me. Feel free to ask questions. Feel free to say, I don't know what you are saying. It makes no sense to me. Learn that. If you don't learn that, I don't have these extraterrestrial powers or something like that to know that I can only look at your eyes and see this guy is lost, or this guy is sleepy, and this guy or girl has no idea what I'm talking about. But look, I generally, from my point of view, as a teacher's point of view, there are always going to be 20-30% of the class that is lost. Okay, I mean, it's just how it is. I mean, sorry, but, and to tell you frankly, I get it. I know that this person is not getting it. Okay, once in the beginning, I will stop and ask you to stop me. After 2-3 lectures, I'll just work with the people that are paying attention. Like, this is how it happens, you know. So know that it's your right to stop me. Know that it is your right to say, screw the class, I didn't understand it, I need to understand this. So if you didn't understand it, let me know. I'll repeat it. I'll repeat it twice. I'll repeat it thrice. There is no shame in that. It's like there's no shame in repeating the batch. There is no shame in asking the question. There is no shame in telling me to stop, repeat. It is okay, because if I lose you now, you're going to be lost in this class. Just so that I will not repeat this, and now I leave it up to you how you want. And by the way, this is how you should probably approach your entire life, if you haven't approached it like that. And this is one problem I've seen in India, you know, that we just don't like to question seniors. Quite possible the question that you have, I don't have an answer for it, because you see, I'm just approaching it from one point of view that I know. You as a fresher, this, that, and the other, you are like, why is he saying this? I don't know. So it's okay. Bring out your point. And don't worry about what people will think, okay? I mean, just say it. Get used to saying it, because otherwise you will have tough time in the interview, I'm telling you. You become that person who understands things but is not able to explain, right? So, yeah. Asset, right? So all I'm saying is, look, asset is just the word, English word asset. Asset is something, thing. No, like property, yeah. Property is just one example of an asset. This laptop is an asset. Whatever that gives you any benefit is an asset. These certificates are assets. Why? Because they're giving you benefit. And based on these certificates, you're coming here. It's just how
means they help us for the business.
They're for business or in your life. Yeah, I mean, they give you benefits. That's what asset is. Right. I mean, you're not buying this plant just because you want to buy. You want to use this plant to build more products. You're going to buy this car so that you can go to Lonavala, without having to wait for the bus and all, so that you enjoy. That's a benefit. Why are we doing things in life? Just so that we are happy, right? I mean, so that's it. Why are you buying jewelry? You're buying this jewelry so that you look good, you look fashionable, you look, Why are you buying the house? Because you don't want to live on the street. You're looking for comforts, you're looking for pleasure, you're looking for benefits. And if a bank can help you get that, why not? That's it. That's just an asset. So what you have seen is there is in the technical terminology, the assets are called as use of funds. Why? Because once you have the money, you pay that money to get the asset. It's the use of funds. Again, finance. Pay attention to the English. Stop for 2 seconds. Pay attention. Use of funds. And where did that funds come from? That funds come from either liabilities or equity. Those of you who come from commerce background, I have one request for you. You guys call everything as liability. Please stop that. Liability is only when you get it from someone else. If it already belongs to you, it is equity. It is your net worth. Do you understand that? So from now on, please differentiate between liabilities and liquidity. Both are source of funds. See, I have $5 in my pocket, 50 rupee note. You gave me 50 rupee note. I mix them together. I don't know which one is what, right? Money doesn't know whether it has come from me or it has come from someone else. So on that regard, yes, both liability and equity are the same, but 150 rupee comes from my savings. Another 50 comes from someone else. That is a liability which I have to pay back. Are we all on the same page?
The thing is, if you're saying that I'm already having a 50 rupees note and I get another one.
Correct.
So
from someone else.
Wouldn't that the 50 rupees note which I already have, wouldn't it be an asset?
Correct. Good. Very nice. So yes, it is an asset. And what you can, why? So initially it will look something like this. If we talk in terms of, so there are two stages that I'm talking about. One is I have equity of 50, which is that 50 rupee note, which also gives me cash of 50. So this cash is an asset. Right now I have liability is equal to 0. This is at time period 0. This is now. Tomorrow morning, I get up, I meet you, and I ask you for 50 rupees, and then my cash becomes 100 rupees. So again, cash. Day after tomorrow, I use this 100 rupee to buy myself, I don't know, what do you get? Some chocolate. That will give me pleasure. Cash is gone, 50. Okay, like that. So which is what you will learn in this example. So there are these little things. So the first lesson in your accounting is actually this only. Assets is always going to be the sum of liability plus equity, which is this. Either it is going to be 50 is equal to 0 plus 50. It's going to be either 100 is equal to 50 plus 50. And that 100 can be just cash. That 100 can be a chocolate. That's your first lesson in accounting. This is the genesis of a balance sheet. Now pay attention to the word balance sheet. Balance sheet balances. What does it balance? It balances asset and liabilities and equity. Okay? Right? Try to get to the fundamental. That's one of the reasons India has not progressed. It's one of the reasons America has progressed. It takes time, but get to ask what, why, how. It will slow you down, but 5 5 years from now, you will be a different person. That much I can guarantee you. It'll take time, but once you have that habit, and most of the time you'll realize most of the people don't have the answer. Now, in 21st century, you don't have to depend on someone like me. There is Google. There is Siri on iPhone. There is Alexa. There is, I don't know, just ask them. They'll give you the answers. What do you need?
But we build a balance sheet.
Huh?
Balance sheet.
Balance sheet just balances. That's it. That's all I'm saying. A balance sheet, the word,
Define.
that's it. It's, I mean, we have the definition. Don't worry about the definition. With me, don't worry. I'm not the definition kind of guy. In fact, it's there in this sheet. You'll see it. It's coming up. Just get the concept that asset equal to liability plus equity is the definition of balance sheet. Essentially, the concept is that, right? And that's why I was just making you focus on the word balance. That's all. Why the word balance in balance sheet? That's all. It sort of gives you that idea. Yeah.
Manufacturing from bought machinery by lending money from the bank.
No, you said it wrong. If a manufacturing company bought the machinery by borrowing from the borrowing is same as liability. Machine will be an asset. Just replace this. This you had some 50, then you got this is borrowing of 50, right? Then instead of chocolate, just call it machinery. Yeah. Okay. Now what I want to do is to give you a real life view of this financial statement. We are going to walk through the story of a business. Yeah.
What I asked, when I have a 50 rupees note, which is an asset, when it turns to be paid, it basically becomes an equity.
No, don't over confuse yourself. Don't overthink, man. Did you understand this? So anyway, this whole example is full of these kind of concepts. So, and that's going to be your learning for next 3-4 lectures. But did you understand up to here?
Yes.
Huh? Do not bring that. No. Equity is there, 50 rupees. Because see, why it is equity, I tell you. Why, even after you bought the chocolate, why you have 50 rupee equity? Unless you have opened the wrapper and eaten it. If it's still there, you can still go back to the shopkeeper and say, give me my 100 back. And you will keep 50 and give the remaining 50 to the friend who you borrowed it from. Yeah. Anyway, so now what we're going to do is we're going to start one business. Okay, that's how we're going to learn accounting and just the practical way of doing it. So we're going to start a very simple business, a tea card business. A tea business. It's not a tea card business. On selling tea on a tea card. All of us can probably relate to that. There's nothing, no complications going on there. You know, we're not even renting a place to give tea on a tea card. Yeah. For that, you probably definitely need money. Okay. Because anything in finance means money needs to come. But it's because it's a simple business, easy business, you can just get this thing on your own. Okay, so you are going to use your own savings. You're not going to take any loans. First of all, we don't even know how to apply for a loan. Okay, and this is not a big business that you need a loan for anyways. You probably can look into your house and ask your parents or somebody, and they can probably give you money to get this thing done. Okay. If you can pay for CFA exam, you can definitely pay for a tea card. That much I can. You probably are better off investing in a tea business than investing in CFA. That also I can probably tell you right away. Okay, so there are a few business rules that we're going to follow. That collect cash as you sell tea to the customers, like how they say in India, no, aaj nakat kal udhar. So you're not going to keep any balances with the customers. Okay, you are not going to do any black money thing. You're going to deposit all the cash that you received in the bank. Okay, you going to pay all the vendors and employees through the bank. Okay, financial year is from April to March. That you understand, right? In India, March 31st is the end of financial. April 1st it starts. Okay. Now suppose you got the business idea on March 30th 2012. Suppose. Okay. Now first thing that you're going to do is you're going to arrange for 10,000 rupees. So then let's say you don't have it, you borrowed it from your mother or your father, whoever it is. But it's just your family money, so we're going to call it equity only. It's not liability. They've raised you so far, and although it's a liability, not many people pay it back. Anyway, as soon as the cash is received, balance sheet comes alive. This is exactly what you were saying, right? You got an asset of called as cash of 10,000. Why it is an asset? Because again, it can give you benefits. You can do whatever you want with 10,000. It's cash. You can buy whatever 10,000 worth rupees, right? And you have no liabilities because it's your own money. Family money, I'm just considering it as your own. Okay. Now, in finance, this can be called as contributed capital. It can be called as owner's equity. It can be shareholder equity or equity. Many names for the same thing. Okay. There are slight differences in all this because right now the word that should be used here, it should be contributed capital only. But my job, one of the jobs that I have with you guys is to take away that fear of many terminologies in finance that you have. Okay, there are many words for the same concept. They just differ a little bit. Okay, so initially you will be better off just clubbing all things that are of similar nature together and worry about the details later. Because you see, time and again, I've seen students, they just kind of confuse themselves to no end, or they get very scared looking at different names for the same thing. And that has happened to me also. I mean, when I was a student, the same thing happened to me. And then later on, I realized for most part, for the majority of time, unless you are going into extreme details as an accountant or something, you don't need to differentiate between these terms: owner's equity, shareholder equity, contributions. And you learn also in detail, but that's not the point. Is just understand it's equity, that it belongs to you. Okay.
If I bought
no, don't worry about buying right now. There's another thing. I will take you further. Okay, if you're going forward, then I will probably pull you back and slow you down. Okay, we'll buy things. Don't worry, it'll come. Right now, are you okay with balance sheet? This is the first balance sheet that you have seen actually. Okay, at least in this example. Are you okay with the word asset? Are you okay with the word liability? Are you okay with the word equity? Are you okay with the fact that this thing can be called as many things? Okay, and are you okay with the fact that this 10,000 is going to be equal to 10,000 because this is a sum of 0 plus 10,000? There are all these things that we are okay with. Let's move forward. Now comes March 31st, 2012, and now we are going to go shopping. We're going to buy stuff. And now balance sheet will change. Income statement will change. Okay, all those things will happen. So what we are going to do now is on March 30th. Remember, March 30th, you arranged for money. March 31st, you're going shopping. And remember, now you've started the business in the year 2012. So March 31st is the last day. So keep that in mind also. As an accountant, you're supposed to keep track of it. So what you do is you go out there and you go shopping. You buy stuff, right? And what do you buy? You buy raw material, sugar, milk, tea powder. Okay. And you pay 2,000 for that. Do you understand? And why is that raw material? Because it will be used together, sugar, milk, tea powder, to make the final product, which is the tea. Do you understand that? Okay. Then you also, what you're going to do is you're going to buy what we call as property, plant and equipment. In your case, there is no property, but you're going to buy plant and equipment. What is your plant? The tea stall, the cart is your plant. What are your equipment? Utensils, gas stoves, all those things are utensils. And let's say you pay 2,000 for utensils, 1,000 for gas stove, 3,000 for tea cart. So total you've spent 6,000. And total you spent 2,000 here. Are you with me? How much money is left with you? 2,000. Good. Because you started with 10,000. You spent 2,000 here. You spent 6,000 here. You ended up with 2,000 remaining balance. Good. Now, then happens March 31st, 2000. Now comes the accountant in the picture, and he will help you make 3 primary financial statements. This one you already have an idea of. We've seen it. It's called balance sheet. Okay. Then there is something called as income statement. And what does income? Now pay attention to the word income statement. If you come from commerce background, you know it as profit and loss statement, P&L. Okay. Now another thing, get used to US GAAP in CFA. They don't use Indian terminology. You will never see a word called P&L. You will see a word called income statement. Okay. Now, what does income statement do? Again, we'll see it. We'll actually build that income statement so that you know, because when you actually do things on your own, in fact, one of the things you can do it as an exercise, if you understand this example, let's say, if you think you understand, you should try to make these things on your own and then cross-check if your answers are coming the same way as what is there in here. And you will see how messed up you will become. Okay, and I'm trying to keep it as simple as possible. So, so that so what does income statement do? It basically gives you idea of what the revenue or sales has been or income has been. And how do you get revenue? By selling something, isn't it? The T. Be very, very careful before you jump. The revenue or sales is not the same as profit. Okay. Once to generate that revenue, there are certain expenses that are involved. Okay. So once those expenses are satisfied, what is left is profit. Revenue minus expenses is equal to profit. If at all, it's a positive number. If it's a negative number, if the expenses are more than the revenue, then it's a loss. That's why this is called a profit and loss statement, P&L. Okay. We'll see an example of that. Then there is something called a statement of cash flow. So once that is, this we'll see through an example. This is most misunderstood, most important statement. So just pay attention to that. Then what happens is, who helps you prepare these statements? Just because you're the CFA charter holder, you are not going to prepare it. Still, you need an accountant. Accountant will come, and that's his job, to audit your firm. What do they mean by the word audit? To basically verify. Audit is nothing but a verification that what you say is actually what you can prove, and therefore they can actually record it. That's the job of an accountant. That's why you see them, most of these accountants actually have glasses, because they keep going through these invoices day in, day out, keep going through these records, and they keep recording it. An accountant is a munshi. I don't know if you've heard the name. That's what the olden times they were called. They were just sitting there recording accounts. Yeah, recording. So, better go for CFA than CA, any day. And in fact, most of the CAs, they end up doing CFA. That's your competition, by the way. And they are very sought after. So that's because much more dynamic, actually, this field, CFA. And there's accounting, there's only so much you can do. There's day in, day out, you have to go and verify. That's it. That's all they do all day long. That's auditing. If you don't understand what auditing is, it's just basically saying that, hey, you said you bought 2,000 rupee worth of raw material. Where is this invoice? Sir, here it is. Correct. Enter. That's an accountant's job. Okay. So yeah, it's a, and then they enter it, and then various financial statements come about and all that. Okay, so if you didn't know this is what an accountant does. Anyway, you tell them what all you have done. You contributed 10,000 to start the business. You spent 2,000. You spent 6,000. No revenue was generated. Remember, because by the time you were done buying these things, financial year came to a close. So you are only going to tell this person up to March 31st, 2012. Not, I'm going to do this. And they're not interested in all that. It's just show me what you have done till now. Right? Okay, that happened. Now, what they'll do is they'll start preparing your income statements and things like that. Now, this is where it starts to get confusing. Okay. So there are two ways of doing things in accounting. One is called as cash accounting, and the other is called as accrual accounting. Okay, now what's the difference between the two? What's the difference between the two? We'll see it. So let's directly jump into income statement. Don't worry about this, okay? If you don't understand 80% of this slide, this particular slide, if you don't understand, it's okay. Okay, don't worry about it. By the end of this FRA, you will understand everything in it. Okay? Don't worry about this. Come to this. Now, what we are going to do is we are going to prepare income statement. And you know, we already talked about what an income statement does. Income statement gives you an idea of the revenue generated and the expenses that you incurred. You understand the word incurred, right?
Yes.
The spending that you did. Now, we're going to prepare, and this is where accounting is such a funny language. You know, based on what methodology you use, you can come up with two different set of numbers for the same company. And this throughout FRA, you'll see examples of this, and you will keep asking me, sir, but why? But this is how it is. There are different ways of looking at things than they allow. So you'll understand what I'm saying. First, let's prepare. So I'll basically, just so that I don't get lost, let me do it like this. So there is cash accounting and there is accrual accounting. This you can use to prepare income statement. This you can use to prepare balance sheet. You can use this to prepare income statement and balance sheet. Funny thing is, it's the same T company. But what you will see is, if you use the methodology of cash accounting to prepare the income statement of T company, you will come up with a different number. And if you use accrual accounting to prepare the company's numbers, you will come up with a different number. So accounting is a very funny language. Actually, it is very funny. Okay, so let's directly jump into the example. Cash accounting records only cash revenue and cash expense. It shows you exactly what you did in cash. Nothing more, nothing less. It is on your face. Look, I did not sell any tea, so I generated zero revenue. Did you understand this? Because you did not sell anything, you have zero revenue. Now, you did spend 2,000 to buy the raw material. The technical term for it is called as cost of goods sold. Okay, or this was also inventory expense. So this is just my creation. This actually is not a technical term. I just put it in there so that your life is a little bit easier. Now, first of all, let's look into the idea of income statement itself before we jump into this. If you income statement, remember we said it starts with revenue, then it totals up all the expenses, and then it gives you either profit and loss, or we call it as earnings. Okay, or you can also think of it in terms of, if this much is my revenue, okay, how much of it has gone into buying raw material, how much of it has gone into buying machinery, how much of it has gone into buying labor, and what is left after paying everything is my profit. Do you understand the significance of this thing? So income statement, you see this raw material. Now, there is a word called as gross profit. So at various levels, you can analyze your income statement. If you only looked at your expense as that of raw material expense, then this entire thing is profit. This is called as gross profit. If you take out the machinery and labor expense also, and then what is left is called as net profit or operating profit, and then there's net profit. So we'll look into details later, but are you getting the concept of income statement? So when you're thinking of income statement, you might want to look at this pizza slices. The revenue is there total, and where is it leaking? Leaking into buying raw material, leaking into buying labor, leaking into buying machinery and all that, right? And so therefore you have at various levels, you can look at the company profitability. So this is the idea of gross profit. how profitable the company is if only it had to generate this much revenue, if only it had to pay the raw material expense. Okay, so why do all this are very confusing? Look, listen, you are going to be an analyst. Now, I'm just give you an idea of how an accountant is different from an analyst. An accountant is just going to record this and just going to leave it, go home. An analyst picks up this thing and has to analyze. Now, this is the income statement of company A. What if there was an income statement of company B? In order to analyze them, they have to analyze at various levels. Who bought inventory for the cheapest price? Who paid cheapest for the labor? Who paid cheapest for the other expenses? Do you see? So now I do want demarcations. I do want levels in income statement so that I can analyze at different levels. Do you understand why gross profit, operating profit, net profit are all needed? Right? For an analyst perspective, they're definitely needed. Otherwise, you can just lump everything together and say 0 minus 8,000 minus 2,000 is my loss. You could have just said that also, no? Like how I have said 0 and I have spent 8,000 and so minus 8,000. Yeah, it's okay. But can I get more details? I would like to see more details because it doesn't give me an idea. Fine. So this is the idea of income statement under cash accounting, and it is recording 2,000, it is recording 6,000. There is nothing else that has happened, and therefore you end up with 8,000 of loss. That's income statement under cash accounting.
So it means a comparison between two companies.
Yeah.
It means a comparison.
Yeah. It helps you compare. Definitely. I mean, if another company had showed 8,000 of profit, you would have bought this company, isn't it, and not this company. So it helps. Plus, it helps you. If you are the owner of the company, you can see, where my revenue is going, how much I'm paying for raw material, how much am I paying for this, how much am I paying for that, and so definitely it helps to have granularity. Once that's done, don't worry about retained earnings right now. I'll look into it later, or dividends and things like that. So come directly to accrual accounting. So what you have seen right now is just this income statement under cash, and you have reported 8,000 of loss. Now remember, on April 30th, you took 10,000 rupees from your mother. On March 30th. And March 31st, you are preparing an income statement, taking it to your mother, and you're showing an 8,000 of loss. Now, whether your mother is financially literate or it's not literate, everybody understands negative numbers. Everybody understands that this person has lost money. Okay, you show that to her, you're not going to get any hugs. You probably are going to get this. So, and you are saying, look, it's not like I have lost that money, but that's just how accountants have prepared it. And accountants are saying, look, I'm not making this up. You did spend that money. And this is where cash accounting gets you into problem. It is factually correct, but logically incorrect. Do you understand that? Therefore, we have the concept of accrual accounting. Now, accrual accounting, when we study CFA or any other place in accounting, anything, they will only teach you accrual. But you will not get the idea of accrual accounting unless someone has told you that there is cash accounting also, which is not needed, and because it doesn't give you the right picture. Okay, with me, it is very important that you get to the nitty-gritty of everything. So accrual accounting, what does it do? Instead of recording just the cash transaction, it matches revenue and expense. How so? It says, look, you have $0 of revenue and you have not even opened your milk jar or this, that, and the other. It's still lying there. So the expense that you have also is 0. And therefore the profit and loss that you also have is 0. And that is the concept of matching revenue and expense. You getting it? And that's accrual accounting. So you see, in accrual accounting, you showed a profit of 0. In cash accounting, you showed a profit of 8,000. Okay. Now, what happens is we move forward because now you're done with income statement. Now, this person will help you prepare balance sheet under cash, balance sheet under accrual. Okay. So remember, now this is where you need to understand the linking of balance sheet and income statement. So ignore all this. Don't worry about it. Yeah, this is from your interview perspective. After you're done with FRA, you know all these things. Don't worry about it. Come directly to this. So March 31st, under accrual accounting, you're going to prepare balance sheet. Oh, sorry, cash accounting. My bad. Cash accounting. Okay. So what happens is, balance sheet you've already seen. There's going to be asset, there's going to be liability, and then there is going to be equity. Yes. Remember, on March 30th, you had 10,000 of cash and 10,000 of equity. Yes. On March 31st, you ended up spending 8,000 of this 10,000 cash. So you left with 2,000 only. And therefore, what ends up happening is, now this, how does this thing reduces? Remember, this thing has become 2,000. How will this become 2,000? Because remember, assets is equal to liabilities plus equity. So this is where you learn the concept of linking income statement to the balance sheet. Okay, and how does that work? The way it works is, and you learn this now because throughout level 1, level 2, I'll keep doing this again and again. So there is balance sheet, there is assets, there is liability. First of all, do you understand this, or do you have a question? And when I write this, do you understand what am I doing? Now, there is income statement. Remember, there was revenue of 0. There were expenses of 8,000. So I ended up with a loss of 8,000. Yeah. So the way income statement talks to, or is linked to, or is married to balance sheet is by the way of final product of income statement goes and gets plugged to the original equity. So 2 and 2. This is very important. And this is how you see 2,000 and 2,000. You see minus 8,000. This comes from what we called as retained earnings. So the final product of income statement is called as earnings. And stop using the word P&L and all that, because that is not applicable in US GAAP. We are going to call this earnings. Okay. The earnings that are not paid out as dividends, or the earnings that are not going out of the company, because once you pay dividends, the company doesn't own that money. You're going to write a check to the people that own the company. The money that is left is called as retained earnings, what you call as reserves in Indian GAAP. Okay. In this case, first of all, you have a loss. So forget about declaring a dividend. Because you're already negative. Where are you going to get dividends from? Right? So this entire thing is retained. In fact, the negative is retained. So this negative actually brings down your surplus. So you're left with 2. So you started with 10,000 of balance sheet. You ended up with 2,000 of balance sheet in cash accounting. So this is sort of difficult to digest, because you actually have not lost money. And also another thing that you will see is it only shows cash as an asset. It doesn't show my other stuff. And what's the use of balance sheet? Balance sheet actually is supposed to show you the status of the business. It is supposed to show you what all is there in the business. This is again cash accounting fails here. It is not showing me the gas stove. It is not showing me the utensils. It is not showing me the tea card. Nothing it's showing. Are you understanding what I'm trying to say? Yeah. Okay. Once that's done, you come to, so look, you have now done with income statement and balance sheet under So the balance sheet was 2000. Yeah, under cash accounting. Now let's get to the balance sheet under accrual accounting. Remember, this was 0. So now if I use the same logic for accrual accounting, you tell me without looking there and without, probably you won't even understand what's mentioned there. How will the balance sheet look in this case? Good, very nice. It should show 10,000, 10,000. Why? Because remember, here this was 0, this was 0, this was 0. So 0 will be added. Good, you're getting it. So 10 plus 0 is 10 only. So now this part is clear because remember liabilities was 0. So obviously this has to be 10.
It will be the card and
Good job. Very nice. Although cash will be down to 2000, but you will record that 2000 of raw material and 6000 of that card. You got it. Thank you very much. I know you got it. And this is exactly what you will see here. Check it out. It's just that it's a big version of the same thing. Did you hear it? That's it, man. You got accrual accounting. It took me 3-4 years to understand this. I'm not kidding. Most MBA finance, 99% of people, if you show them this, they will not have any idea what this is. And this is what, you know, and one of my students went to IIM Ahmedabad, and he said, this what you did is they do multiple versions of the same thing in accounting. That's how they teach. Because this just makes complete sense. Actually, people have done their CFAs, CAs, this, that, and the other, and ultimately this itself is very difficult to be done. So anyway, point being, your time is not wasted, and I'm glad that I was able to get something taken care of. Yeah. No, not 0. 0 का तो फिर करना ही क्या है? सब हीरो बन के घूमेंगे. No. All I'm saying is in this particular instance, you are getting 0 as a number, which makes sense because you did not spend any money and you did spend the money, but you spent on this PP&E, which is being recorded on the balance sheet. It's been added. And now it gives you a perfect view of the picture because this is exactly what your business is. You are left with 2,000 of cash. You're left with 2,000 of raw material. You are left with 6,000 worth of tea cart and all that, utensils and things. Okay. Now, and this also you understand, right? 0 of earnings is going to be added to beginning equity of 10,000. So 10,000, 10,000. Yeah. And now if you show this to your mother, they'll understand. Yes, I gave you 10,000. I understand that I see the balance sheet and I see that there is 8,000 worth of stuff and 2,000 of cash. So, and you did not, I mean, it was only one day that you had, so you did not do any business. So I understand that also. So great, wonderful, awesome. So that is why people prefer accrual accounting. Just Hiral. I don't even know if she's there. Hiral, are you there? She's left. She might have watched the previous recording. Okay. So, and she's in ACCA, so it's probably basic for her anyways. Oh, you're there. Okay, cool. Wonderful. You can log off if you've got it. I mean, I don't want you to wasting your time because we'll only get to the cash flow statement and that too we'll not finish the entire slide. So up to you. Okay, and same thing, by the way, if you got it, finding it just boring, leave. Don't waste your time. There's no point wasting each other's time. So if you all leave, then I can also leave. This goes without saying. Accrual accounting, we're done. Okay, look. So we're done with accrual accounting and balance sheet under both. So now you see the balance sheet looks like 10 and this income statement shows 0. So you've seen income statement, balance sheet. Now let's look at cash flow statement. Now the good thing is cash flow statement will look the same under both. Now, cash flow statement, what does it do? What it does, is it shows you all the cash transactions that happened in the company. Okay. In fact, you have already seen a statement like this, where just in last 20-30 minutes, you have seen a statement which recorded cash transactions. What statement was that under what accounting? You only recorded cash transactions. Which statement was that? Income statement under cash accounting. Good job. Start answering questions, okay? Because at some point I'll stop talking and you'll see that I ask more questions than do the talking. So this is the first class. So because what happens is, look, I understand the concentration power is not that much. Okay, I understand. It's very difficult to stay concentrated on such heavy duty topics. So the best way to keep you going is for me to ask questions. That just goes without saying, because because what you'll realize is after 2-3 hours, you will be so sleepy that you will first, your eyes will just be jammed. Then you just keep staring at me. And then somebody is talking. Somebody is going into your ears, but somehow it's not processing. After a while, when you get to that one last stage before the sleep comes, you'll just see somebody opening, closing their mouth before you're knocked out. So there have been many instances like that, and it's just okay, man. This is just, look, we're all human beings, at the end of the day, we all need our sleep. But that's another thing. If you're not looking to prepare for CFA or investments or anything like that, another use of these video lectures is you can just open them up before you go to sleep in the night. You'll actually get a very good sleep. I think that's probably the best use of these lectures. I do that sometimes myself. So statement of cash flow. Okay, what are we doing here? We are going to record all the cash transactions, except that we are going to put it in a certain organized format, so that one look at this cash flow statement and where cash stands in this company. Remember I told you, just by the logic, we ruled out cash accounting and we accepted accrual accounting. Now, accrual accounting, although cash was spent, income statement didn't show. Do you understand? Cash accounting was doing justice. It was showing you 8,000 was spent, 8,000 was recorded somehow. Now, so therefore, you definitely need a cash flow statement so that at least I know where the company's cash is, where is it gone, where is it come from, right? Because none of these two statements are telling me that. Although balance sheet does tell me the cash status, but it only tells me what is the ending cash. When you look at actually a real life balance sheet, it will not show like this, 0 plus 10 minus 8. It will only show 2. But I need to know how they've arrived at that 2, which I would not know unless you give me a separate cash flow statement. Do you understand? Okay, and therefore cash flow statement is hugely important. Okay, if it was cash accounting, then I can just rearrange this income statement to make it into 3 categories. We call them as cash flow from operating, cash flow from investing, cash flow from financing. Right now that's not important. Don't worry about it. What categories these are. Right now the focus is more on understanding the cash statement, okay, or how it is arrived at. What is its use? Its use is, or how it is arrived at, is essentially by 2 methods: direct versus indirect. Okay, there are 2 methods of arriving at cash. The direct method, it goes straight into these line items. How much cash you collected from customer? 0. How much cash you made for the raw material? 2,000. How much you made for the PP&E? 6,000. And the way the cash flow statement works is it shows you changes in cash, which it adds to the beginning cash, so that you get what? So that you get what? Changes in cash this year plus whatever the beginning cash this year gives you what? Ending cash, cash balance, whatever you want to call it. Do you understand? I had 10 rupees in the beginning of the year. Then I spent 2,000 and I spent 6,000. So the net change in cash was -8. So if I add -8 to the 10, the ending cash is 2. So do you see that the end result is going to be 2,000? And where have you seen this 2,000 before? In what statement have you seen this 2,000? Balance sheet. Good job. On the top left of the balance sheet. If you didn't understand the question, if you didn't answer, if you couldn't come up with the answer, always don't look at my face. You can go back to the notes and immediately verify. That's how I know whether you're actually getting it or not. If you're just staring at me, I know neither you understood the question nor you understood the answer. Did you verify that the balance sheet does mention 2,000 as the cash? Do you understand that the ending result of the cash statement is going to be the same as the ending back cash on the balance sheet? It has to be. It's just that cash flow statement gives you more details as to how that 2,000 was arrived at. Okay. So that's direct method. It's directly recording everything. Then there is something called as. So do you understand the flow of the cash flow statement? Changes in cash are added to the beginning cash so that you arrive at the ending cash. Good. Okay. Now, there is another method which you can use to prepare cash flow statement, which is called as indirect method. Okay. Don't you want to ask me a question here? No? Shouldn't there be a question like, so why two methods for preparing cash flow statement? Would you get a different answer if you use direct versus indirect? Should you be getting a different answer? Huh? You should get the same answer, isn't it? So why? Like you can catch your nose like this, direct. And why am I? Oh, power of yoga. Stretch. Why? Indirect. That should be a question. The answer is, believe it or not, the accounting systems are not that good to capture direct method. Cash in big companies using direct method. For small companies, this actually can work. Sometimes you'll see that people use direct method. But in big companies with multiple lines of businesses, with multiple countries that they operate in, with multiple customers, this becomes a headache, believe it or not. The accounting systems are not that good. And that's one of the reasons we have indirect method as a method for calculating cash. Okay. So having said that, now you'll have to learn the indirect method, because indirect method is what is being taught in academics as well as is what is mostly followed. Okay. Now, the idea of indirect method has its roots. You understand the roots, has its fundamental, has its origin in income statement cash accounting. Okay. How so? So this you'll have to pay attention to see if you can follow this. Let's see if I can make you understand this. Remember, income statement under cash accounting showed 0, -2, -6, -8. Right, which is actually nothing but change in cash this year. If you had added 10 to it, you would have received you would have gotten to the ending cash. Correct. Now, income statement under accrual was this. Now, if you add 10 to it, you will end up showing ending cash is 10. Any ideas what indirect statement will do now to come up with cash? What it should do? So this is your income statement under accrual. This is your income statement under cash. Exactly. Somehow you have to subtract -2. Somehow you have to subtract -6 so that this becomes -8 and this becomes somehow. Actually, that is the process of indirect statement. That is exactly what indirect statement does. Indirect way of calculating cash does. It is actually trying to reconcile this income statement to say that what it would have looked like under cash accounting. Because look, these two items are the same in both. Zero cash, zero cash. But somehow because of the accrual nature of accounting, we ended up recording 0 instead of -2. So how about we actually use -2 here, or we make adjustments to the income statement, or more going by the definition, we make adjustments to the final outcome of the income statement. So what we do is we say 0 is the final outcome of the income statement under accrual accounting. Let's start doing things that have been missed out from this statement. -2, -6. But sir, how will I know what statements, what items have been missed out? There's a trick to it. The trick is you will look at the balance sheet. The balance sheet as of 31st March 2011, I'll tell you. And balance sheet as of 31st March 2012. Okay. Remember, this was all 0, 0, 0, because you only got cash as of 30th March 2012. Good. And ultimately this became what? 2. Inventory was 2. 6, isn't it? That was 10. This was 10. You with me or lost? Right? So everything was 0, 0, 0. This 2 was the cash. This 2 was the inventory. This 6 was PP&E. So the trick, and I'm going to just give you the basic version of it so that we at least understand. Right now, the whole point is to at least understand what's going on. To figure out this -2, what you say is, look, if the inventory has gone up by 2, and inventory is an asset, and an asset is a use or source, use of cash, then 0 to 2 increase must be a decrease of 2 in cash. If PP&E has gone from 0 to 6, and 6 is an asset, which is a use of cash, then you must have used decrease of -6. And this is how you make use of the two balance sheets to figure out the changes in the, I'm not talking about liabilities, we'll see it later and all that. You'll get into, there's an entire chapter on cash flow statement. So now you see this example is your fundamental building block to understand the entire FRA. If I miss you here, you're done. Okay. And now you see this becomes -8, to which you add 10, and then you get, which is exactly what this is trying to do here. So end result of direct or indirect is going to be the same, which is going to be the same as the cash on the balance sheet, except that you just arrive at it in the different way. Direct, so you don't have to do anything. I mean, if you have the data, then you can just plug it in, great. But in CFA as well as everywhere else in your academics, is you're going to use indirect, and this is the way. This is the genesis of how to reconcile income statement under accrual accounting to cash. Is the indirect method of calculating. That's all. If you understood that, it's good. And then I've not gone into operating, financing, investing activities, which we'll look into it later tomorrow. But my focus was more on this, that we should be able to understand the basics. And so, yeah, ask me questions. Yeah, go ahead.
Why does indirect method usually use?
Why is it used? Because that's what I said. No, the direct method, accounting systems are not robust enough to actually be able to give you these numbers. That's why they use indirect methods, because there are just too many complications, too many business. Like, think of Reliance Industries, multiple lines of businesses, multiple customers, multiple countries that they work in, and it's just a big mesh up, and they just don't. I mean, you would think that you should be able to arrive at this data by just plugging, just enter the numbers in Tally, hit enter, and it should give you cash. But on a small level, it's fine. But on a bigger level, to be able to consolidate from different subsidiaries and different clients and different countries, it's just a mess, complicated. So therefore, they use indirect method. Okay. There is one more thing. So that is the idea behind. And so tomorrow's class, this is it. Like last class, in last lecture, we have gone up to this slide only. And so the next set, what happens is, April 1st, we start new financial year. Okay. And then the business starts. And then more complications come in, and the income statement complicates, and the balance sheet complicates, and everything complicates. But if you understood this, you should be able to get that done. Okay. One more thing that I wanted to talk about was if you come to this balance sheet, you'll hear this term called as current assets. You will hear this term called as long-lived assets. It is also called as non-current assets, by the way. Okay. So remember, we spent the money and we got inventory or raw material. And I'm also going to talk to you about this. I keep interchangeably using raw material and inventory. I don't know if you've noticed that. Sometimes I call it raw material, sometimes I call it inventory. We'll just look into that also. First, let me just focus on this current assets and long-lived assets. So there are certain assets from the perspective of finance, there are certain assets which can be converted into another asset very quickly, immediately, or in less time. Okay, those are called as current assets. What do I mean by that? Look at cash. I'm roaming around with cash in my pocket. I can stop at a shop, give the cash, buy anything that I want. Cash is gone, something else has come in. So in finance, we call this liquid. Cash is the most liquid thing that is out there. Okay, it's not from liquid, solid, gas perspective. Liquid from the perspective of fluidity, that it can change into very fluidly, easily. Okay, without any. Therefore, it's current assets. Cash is a current asset. Inventory, it is not as liquid as cash, but it is still from the perspective of this raw material that you have, sugar, milk, tea powder. The moment I add them, mix them, put water in it, it becomes tea. So again, it has converted very easily from just being sugar to tea. Did you understand what I just said? Therefore, it is current asset. Now think of what we call as long-lived assets or non-current assets or property, plant and equipment. Those are long-lived assets. What can I do with that T card? Can I mix it with something and make it into something? Can I, even if I want, let's say the T card, once I have bought it, if I've opened it, if I've used it once, and if I take it the next day to the vendor that I bought it from, they won't take it. Or will they give me the same amount that I paid for? No, they will not. Therefore, either from the perspective of their long-lasting nature, the T card can run for 10 years, 5 years, whatever, So they are long-lived. From the perspective of not being very liquid, not being able to sell or not being able to convert them into something else, they are non-current. So, and from the perspective of it is my plant, isn't it? T card. It's property, plant, and so they are the same things: long-lived assets, non-current assets, property, plant, equipment. Okay.
So what about tangible assets?
We'll talk about it next. I'll give you some examples to understand. But these are tangible assets. All the assets that you see here listed are tangible. The intangible, I'll make up an example in this example itself later on to give you an idea of what intangible are. That's all. Yes. So I'll give you an example. So that being said, the last thing before I let you go is the concept of inventory, which I had discussed in the last lecture. So I just want to bring it up here also. The inventory, as we call it, if you come from Indian GAAP background, you call it stock, right? Opening stock, closing stock, all that, right? Again, you have to let go of this wording. You have to embrace inventory. Okay, and inventory has got a few things included in it. There is something called as raw material, which you just saw. There is something called as work in progress, which I'll quickly explain to you. And then there is something called as finished goods. Okay, all these guys together make up inventory. Raw material you already saw. Now imagine on 31st March 2012, if you happen to start preparing your tea, for example, and 5 p.m. sharp, you had to report whatever you have to report. And 5 p.m. that tea was not done. Then it is neither raw material nor finished goods. It is work in progress. Suppose before 5 p.m. you had made some tea cups, but they were not sold. Then they are finished goods. Yeah. That's the, so if it's difficult to imagine with the example of tea, think of real estate, builders. Raw material would be concrete, cement, all that, right? You mix it, bricks and all that, steel and, and if you can finish it on 31st March 2012 and you're not able to sell it, then it's finished goods. If you've only built it halfway, then it is work in progress. That's all. That's the concept of inventory. Okay. Yeah, that's all we had discussed. I don't think we had discussed the CFO, CFI, CFF. So again, I'll take it up later. Don't want to stuff too many concepts also in one day. Any questions on this? Take a look. I'll give you 2 minutes. Up to now, whatever we have discussed, see if you by yourself can actually prepare this statement. If you can, then you are up. You will be able to keep pace with me. Because when I say it, it might look easy. When you try to do it yourself, believe me, it will get. So 1 mark of whether you have understood this or not is to be able to build these things yourself. Write it like this: assets, liability, equity. What is it on 30th March 2012? Balance sheet. What is the 31st March 2000? What is the income statement? What is the cash flow statement? Try to do it yourself. Indirect method, indirect method, all that. Okay. So you'll remember, right? So income statement, that final earnings gets plugged to the equity, beginning equity, right? Also another thing, which I think, I don't know if I'm, I don't think, you see this, I'm always starting, if we come to this one, let's say accrual accounting, when I'm calculating ending cash, I'm saying 0 plus 10,000 minus 8,000. What is this 0? The reserve, I told you, right, that is retained earnings. So that has got nothing to do with what is the zero? Opening balance. Thank you very much. So see, this is where now if you pay attention, this is beginning cash. And why am I putting zero here for beginning cash? Didn't we have 10,000? As of, we didn't have 10,000 as of April 1st, 2011. Good job. Therefore, we had zero. Only on 30th March 2012, we got 10,000. And on 31st, we spent 8,000. So be very careful with this. Same thing you'll see here, like although some places I probably am not that careful, but I've been trying, I tried to be as much careful as I could. Zero, and then I added 2,000 to it. Why? Because there were zero utensils. Then 2,000 worth of utensils came in. Okay. So anyway, any other questions? But that's all I wanted to talk about today. The rest remaining. So the plan is to finish up these slides tomorrow, and if possible, then get started with the syllabus.
So the class starting at
2 p.m. 2 p.m. Until the test starts, 2 p.m. Do until somebody faints in the class, or somebody is so deep in sleep that they are snoring away, and then I'm saying, okay, let them pulse. Let that 6 or something. Look, if it starts at 2:30 up to 6:30, if it starts at 2, then 6. But 2 p.m. thing will be over within a week or so, one more week maybe. But after that, you'll be coming here at 1:30 once the test series starts. 1:30 to 2:30 will be the test. Sometimes you'll be coming at 1 o'clock because there will be some tests that will be 1.5 hours. Every Saturday and Sunday, sir. अरे यार, you don't have this schedule or what? ये टाइम टेबल नहीं है क्या तुम्हारे पास, या तुम ईमेल चेक नहीं करते हो तुम्हारा? अरे यार, ऐसे कैसे काम चलेगा दोस्त? We have to be. These are some of the things that are. All of you are voting age people. In this class, though, everybody is an adult. You might be a munna in your house. Here, you have to be on track. You have to be savvy with. In fact, if you're looking to, you have to get used to this Viz IQ and all that. That Anand will send you instructions, because otherwise, how will you watch these recordings if you miss a lecture? You have to be savvy with these G drives and things like that, and to be able to download some basic things. I expect. You have to know the syllabus or how we are going to teach, what we are going to teach, when we are going to teach, because we follow this to the T. I worked in US, so I am not like your desi people here, kuch bol ke kuch and all that. This is it. And this was prepared 4 months back itself. Whatever, and this is how it is going to be. There will be no changes. Don't come to me 1 week before. I don't even know if it's clashing with Diwali or if it's close to clashing with Christmas and all that. It is what it is. If it is Diwali and there is a lecture schedule, it will be there. That's just how I am. So let's just be. I mean, we take it sincerely, whatever we do here. So I expect students to be sincere as well. Otherwise, there are many who join and they just drop out in the end. So don't become one of that, okay? Because I need your full cooperation. And then you, again, when we are done with a topic, it's your duty to watch the video recordings of those problem-solving sessions. So again, there are a lot of things. So pay attention to the emails that Anand will send you. There will be 5-6 emails that will come. In another 2 weeks, you'll start quant. You start before quant lecture, you need to have the calculator. You can't come to the quant lecture without calculator. So, sir, मैं तो भूल ही गया. तो भूल गए तो हो गया खत्म. That first lecture of quant is the most important lecture. You don't have the calculator, you're done. So let's just.
There are the scheduled emails sent only to the people who are registered.
I think the first email that Anand sends has, you can take a picture from here itself. You have to learn to open your emails. In email, there is something called as attachment. You have to click on that attachment. It takes time on 3G to open up. Before that, WhatsApp message comes from girlfriend, boyfriend, new movie gets released. So look, if you're working with professionals, you have to get your act together. We take it sincerely. And we'll not tell you again and again. There's no point. So the best that survive, and I would rather work with the. I'm not looking for intelligent people. I'm just looking for sincere people. That's it. And I didn't use the word serious. I don't know. Let's. Yeah. Industry demands it. Industry demands it, and it's not an excuse that I'm only 18-year-old or 19-year-old, or it's also not an excuse that I've seen the world 30-year-old. I know everything. That's not an excuse. There's always a scope for learning. There's always a scope for improving. So that's it, man. Any other questions? Let me know. But take a picture of this timetable if you don't have it. Otherwise, 2 p.m. tomorrow. Okay. All right. Take care. Bye. Okay. Bye.